really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. Edgefinder
Yeah,
Mobile.
yeah.
Yeah. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. Edgefinder
Yeah,
Mobile.
yeah.
Yeah.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Happy Friday to you all. You know what I like about Fridays? The same thing I liked about Fridays in high school. In high school, on Fridays, it was all about like jeans and a t-shirt, and I love that. Jeans and a t-shirt. If we could just normalize everybody wearing jeans and a t-shirt every day, maybe a lot of the world's problems would go away. What do you think? You guys agree? Do you disagree? Here's my jeans and a t-shirt. I mean, come on, greatest t-shirt you could have ever asked for. It matches the logo, see? And I got the jeans. You guys didn't know what kind of show you were walking into today, huh? I'm slowly getting too comfortable on my live streams. I'm slowly getting too comfortable. Yesterday, I was talking about I'm just gonna walk off and go pee because I left the show to Chris, and I don't know. It's weird. But anyways, we've got 365 people here. I just want to say a personal hello to each one of you. So let's go ahead and list off everybody in the chat. I'm kidding. But no, I do want to just say thank you guys for supporting. I was having a bit of a surreal thought yesterday. We were having a really big live stream. Everybody was hanging out. We had a great time yesterday. Great show. And it just sometimes I just wake up and I'm just super thankful to be able to do this every day. Trading and investing and markets is my absolute passion. I love learning more about it every day. And I'm just thankful I get to share it with you guys. So there's a little fist bump for your morning. Let's get into some charts and talk some trading. Can followers from A1 Trading purchase that t-shirt? I think you can, but I forgot where it is. I think we had maybe we should put together our gift shop again. I mean, for you real fans, if I ever saw somebody wearing an A1 t-shirt with like a live stream quote on it in person, I might cry. That I don't cry, but that might make me cry because it would be like, wow, what's up, gang? Anyways, I'll write it down. Shirls, you've been a regular supporter. I'll try and find a way where we could sell some shirts. Sell A1 shirts. Because that would be cool. And I wouldn't even I would just make those like as low cost. Like I wouldn't even try and make a profit on those shirts. That would just be cool. If anybody wants to buy a shirt, we would be able to sell it to you at like exactly the price that we pay for it minus shipping or whatever. Yeah. So let's get into it, guys. We've got the S&P 500. Was such a fascinating day yesterday. I could spend 30 minutes, and I probably will, probably spend 30 minutes just talking about the rotation that was going on yesterday. If you guys don't follow me on Twitter, some of you guys are watching on Twitter right now. If you don't follow me on Twitter, I put out a tweet yesterday just talking about the divergence between the RSP yesterday and the SPY. And I just want to go over this for just a quick moment because it's really important. We also have to be quick here because we have the producer price index coming out in just 8 or 9 minutes to go here. But check this out. Here's the SPY, right? The S&P 500 yesterday was down, but the RSP was up. Now, what is the RSP? The RSP is a S&P 500 equal weighted ETF. So the SPY is an ETF that just does the S&P 500, but it's market weighted. So companies like Nvidia are much heavier in this index than companies like Delta Airlines. However, in our example of RSP, it takes the same 500 stocks and it says we're going to equally weight Nvidia, Delta, Costco, Apple, etc. So what we get is a picture yesterday that was very, very new. We saw the equal weighted ETF of the S&P 500 actually trading higher on the day aggressively. Now, what did that tell you? That told you that a lot of stocks rallied yesterday. So if you only looked at the S&P 500 and you didn't understand the underlying components to the S&P 500, you might have looked at yesterday and said, oh, it was a down day for stocks. They didn't like inflation numbers. Actually, they loved inflation numbers so much so that the market was convinced. They sold out of the safety play, which has been buy the big tech, right? Buy the big safe tech that has $1 bajillion in their pocket. And let's go get risky. Let's go get into some stuff that has more upside if interest rates come down. That's what happened yesterday. We saw it across the board. We saw it in utilities. We saw it in industrials, real estate. We saw a lot of stuff take a turn yesterday. And that was arguably very healthy for the market. We also saw gold rip higher yesterday. We saw yields drop yesterday. The theory there is, look, inflation is down. Inflation, we may be seeing, I think it's fair to say there's a shot on goal here for interest rate cuts in September. Okay? I saw a woman wearing a dress in the same colors used on the Edgefinder. Maybe she had the tool. Maybe Lee. I got to say, though, that would be an ugly dress. Blue, salmon pink, and gray. It looks cool, in my opinion, for software, for trading. But on a lady's dress, I don't ever see my wife wearing those colors in combination. But don't ask me because I have a very limited scope for style. So maybe I'm just wrong. But I didn't pick these colors. These colors were put together by Julie, who put together our website. And Julie has a talent for making stuff look just great. Like our website is really nice because of the design that Julie's worked on. So anyways, guys, we have PPI in just a few minutes. The question today is a key and simple one. Yesterday, we had the consumer price index come in very soft, right? It was like the first negative month over month inflation reading for CPI yesterday. Look at this. CPI month over month was negative. Finally, we see the consumer price index showing some movement lower. And we talked about this yesterday, but what I was kind of big on was this. Check this out. Not only did inflation come in down yesterday, but that marks several months in a row where we've seen inflation coming down. Remember what the Fed has said. They want to cut interest rates. There's no question that they would like to cut interest rates to help out the consumer. But they don't want to do that preemptively. They want to wait for inflation to show signs of cooling. We've got signs of cooling again. Now, is it over? Or is it 100% now inflation's just dead and it's never coming back? No, because we're still above 2%. We could still see inflation accelerate, but maybe, just maybe, we're going to thread the needle here and we'll see maybe rate cuts come into the picture and the labor market not fall apart and you get this soft landing idea. Dre, what's up, man? Thank you very much for the $2. Appreciate you on that. Hold on. Let me give you some sound effects. Thank you very much, Dre. Morning, Nick. Great catch on gold. Thank you so much. Thank you. Yeah, gold has been a monster mover overall. I've been in this one for some time. Certainly did not play out immediately in my favor. I was very, I mean, with hindsight in my favor, right? My entry was abysmal, but my stop loss was right here, and it came down very close, and then just like an unstoppable train, the fundamentals swung back in favor of the gold story. I think they were always there for the gold story. This period of time was one big consolidation phase that I think a lot of big money was loading up on. Just a few minutes to go, guys, on the PPI numbers, which will be coming out soon. It's the producer price index that will give us another reading of inflation. What are we forecasting here? Let's take a look. We're talking about, let's do it this way. What are we looking for? We're looking for FX Street, because I want the year-over-year PPI. Okay. Always makes me change my thing. I got to save this somehow. Eastern Standard Time. Okay. So here we go. The producer price index. I'm assuming that means 3 minutes. Yeah. The producer price index year over year. This is what we're looking for. We are expecting 2.3. Let's see if we get 2.3, if we get 2.2, if we get 2.4. This is very important to the markets, guys. We got 2 minutes to go. Very important that you don't see PPI ruin the fun today. And what I mean by that is you don't want to see inflation suddenly much higher on the producer price index, because that would take away some of the positivity that a cool CPI print yesterday gave us. So what I'm going to do really quick is, let me just pull this up. Dre, thank you again for the $2. Really appreciate that, man. Gold was a monster. We'll cover gold in more detail soon. I want to just switch over to our all markets here so we can just watch this. We've got about 1 minute to go. 845 people here watching. Do me a quick favor. If you are enjoying the show, hit the thumbs up button. It's good luck. It's good karma. Hit the thumbs up button on the stream as we get closer here to the producer price index. So what you're looking at here on the screen, guys, is you've got the S&P 500. These are hourly charts, by the way. The NASDAQ, the Dow Jones, the dollar index is right here. Euro, pound, gold, oil. Okay, so you've got everything on the screen here. Most of the major indices, charts, things like that. So we'll be watching this here. 30 seconds to go before the producer price index comes out. And again, either confirms the progress in inflation or puts a little thorn in it. So we'll see. But don't go anywhere after the spike. Most people leave, so don't go anywhere. We got breaking news coming in just a moment. All right, 10 seconds to go here. All right, euro is lower. US 30, S&P lower. Gold lower here. Pound, euro lower. Dollar slightly higher. That would suggest that it's probably coming in as expected. Let's see if I'm... Oh, no. Core is higher. Producer price index month over month is higher. Oh, sorry. Let's go look at our year over year. Year over year came in at 2.6. Okay. So now you have maybe a little bit of a... I'm going to say this right off the bat. There is a in my opinion, possibility that today you see a bit of a reversal on the theory from yesterday, right? Buy everything except tech. Maybe we don't see that be the case today. That being said, we've got gold slightly lower, euro jumped lower and then came back. The dollar index slightly higher here. No massive moves, but certainly not the ideal inflation print here this morning. You've got producer price index coming in hotter than expected. Let's switch over to our main market view. There's gold coming down here, and we are actually testing a support level here pretty soon around this 23.85 level, let's call it. Previous resistance here and here. As price comes into this zone, let's see how price reacts for gold. So if you're a gold trader here today, should be interesting. My stop loss is trailed below this level. I'm not closing out of my position on this number as I'm still very bullish overall. However, if it breaks this level, then maybe it's time to take profits on this move that I've had and look for a chance to get back in. That would be my game plan for gold today. Simple as that. I'm not adding to my trade. I'm not taking profits here. I'm not, I don't have a take profit on my trade. I've got my entry over here. I've got my stop loss trailed in profit. If price breaks support here today, if we reverse the effects of yesterday, that tells me, okay, go ahead and take profits on the move you've had and start fresh. So that is my theory on gold. Just wanted to give you that heads up. I know a lot of traders are also watching gold themselves. We do see the NASDAQ slightly lower, bounced off of that number. S&P, same thing. Here's the Dow Jones, about flat here on the day. The Russell, again, Russell's not going to particularly love any hot inflation prints. And that producer price index was hotter than expected. So the producer price index just jumped higher on a year-over-year basis. Again, let's go back to this. You've got the year-over-year for PPI is 2.6. So 2.6 compared to previously was at 2.2. That is a jump, right? So you have some inflation data coming in hotter than expected here. Not good for metals, not good for the Russell particularly today. So again, giving back some of those gains here this morning just a bit, and probably not good for yields. Yields moving higher here. So, I mean, good for a move higher in yields, but not great for bonds. Currency-wise, let's take a look at the dollar index. The dollar index bouncing just slightly here off of this. Again, you had support here. Seemingly, this 104 level, I'm telling you guys, has been such a monster support zone for dollar bulls. Take a look at take a look left on the daily chart. You can see support all across here. And that's the question is was this number going to be enough to punch through the lows right away? And this producer price index number does not help the story for dollar bearishness. It's not the end of the world, though. You take a look. I think you have to kind of take this stuff with a grain of salt because you have one data point out of many. Always, one thing I've learned trying to improve on fundamentals over time is remember, don't lose sight of don't lose focus, right? The focus of fundamentals is not to overvalue any specific metric. The goal with fundamentals is to build a bias based on several key economic figures that are coming out and to build a bias overall. It's rare that you get something that's just perfectly all synced up, bullish or bearish. Very rare, right? For gold, I would argue that most economic figures here, cooling PMI numbers, right? These retail sales numbers coming in really light. Inflation yesterday, CPI overall was really good for gold. Unemployment rate trending higher. I mean, most figures here, in my view, support bullishness. That's why the Edgefinder has calculated all of that automatically and generated this bullish reading for gold, which is what kind of caught my attention in the first place for why I've been long gold this year. The Edgefinder has been bullish for much of this year. Now, with that said, what else is setting up here? You got the Australian dollar, you got the euro dollar. the NASDAQ, pound dollar. It's basically continuing to say dollar weakness. On a technical basis for the dollar index, there's two setups I see for dollar traders out there. These are my thoughts. Okay. If you're bullish, I mean, this is a support level. If you're bullish, if you disagree with my thought process, you might think, okay, it's going to round off there and we're going to see kind of a push higher. Then in that case, you're expecting not good things for the rate cut story. You're expecting rate cuts to get pushed back. You don't think they're going to happen in September. You think something like that, right? That being said, what are the setups for dollar bears? I'm a dollar bear right now. Like I've been bearish on the dollar. Clearly with my positioning, if we take a look at all my positions here, XLK technology benefits from interest rate cuts overall. Not a good case study yesterday, but I think that was a rotation move out of technology and into everything else. The S&P 493, right? Instead of the S&P 7 that we've seen for the last months and months, right? A lot of people just buying the big names only. Anyways, gold, right? Gold, I'm long on gold. That is a predominantly, preferably weaker dollar trade. TLT is certainly a weaker dollar trade, right? Yields falling usually happen in tandem with a falling US dollar. Not always, but often enough, right? If monetary policy comes out saying, more dovish, more saying, okay, we're going to see interest rate cuts this year. If that is more likely to happen, TLT would go up. That's the theory there. And finally, silver, right? So another dollar bearish proxy, if you will. So when we take a look at my positioning, I'm very much on the camp of dollar bearishness. Not to mention, I'm also short USD CHF as of several days ago. So I'm very bearish, very set up for bearishness on the dollar. That does not mean that I'm 100% going to be right about the dollar going lower, right? Because probabilities wise, it's all that matters. I show you guys on my, one thing that drives me crazy when you watch content creators in the trading space is when they never actually talk about where they're positioned, or maybe more specifically, when they never talk about positions unless they're already incredibly in profit. Now you might say, well, Nick, you're in profit. That's true. But I've never, I started out telling you guys, oh, I'm looking at this trade. And then, I share it in the Discord channel with everybody, which by the way, we'll drop the link here. If you guys would like to join the Discord channel, we'll drop the link to apply for that in the chat here. So anyways, the setups for the dollar index would be breaks and retests of this 104 level. If you get a break, that's probably a good shot for interest rate cuts, maybe as soon as July, but more confidently September, maybe a second rate cut coming in December or November. So that would be what you want to happen on the rate cut story for the dollar index to really break those lows. Conversely, if you think, well, we're a little oversold, we may see a pullback. There's also this like 105 zone. So both setups for me look fair for continued dollar bearishness. I am strongly in that camp for now. If something changes, it will show up on the Edgefinder. But right now, what we can see is if we just took, let's do this really quick. We'll do major currency pairs only. So these are the USD pairs. And here's what we're getting from the Edgefinder's scoring system. For currency traders in the audience, we've got euro dollar. That is a bullish reading for the euro, a bearish reading for the dollar. For the Australian dollar, we're getting a strong reading for the Australian dollar and a bearish one for the USD. USD CHF, bearish for the dollar. USD JPY actually getting a bearish reading as well. So what we can kind of conclude here from the Edgefinder's analysis based on all the economic data is that right now the dollar has several bearish factors. Doesn't mean it has to go lower, but based on my system here, I think there is room for the dollar to continue lower. And if I'm wrong, that's where you put stop losses on trades and you manage risk, because I'm not always right. Hopefully that makes sense. Real quick, guys, we are also, just a heads up, today we are doing our 55% off discount that we did yesterday and today only. We're doing 55% off the Edgefinder. If this is a tool that you think would be useful to you, you can currently get it off for more than half off for that is, again, a massive, massive discount. If you'd like to get access to the Edgefinder, we've got some information for you. It takes 2 seconds to get some information about it. We'll drop a link here in the chat as we speak, which will take you to a place where you can actually chat with a person on our support team. So my company, A1 Trading, we're a software company in Atlanta, Georgia. We build tools for traders on the fundamentals side. It is something that we specialize in, and we spend probably like 25 hours a day on this stuff. So if you would like to check out our tools and you'd like to get access to our stuff that we're working on day in, day out, I know it says CPI day sale, but we're just extending it from yesterday. CPI and PPI day sales is really what it should say. But you can currently get 55% off using the link being dropped here in the chat. And if you're watching back, I know a lot of people rewatch these live streams. There will be a link in the description for you to speak with someone on our support team. Now, when you do this, even if you are not sure if you want to buy it or not, you can just chat with someone on our team. They can answer your questions. We have a support team available for any technical questions you have about the tool. If you trade futures or FX or commodities, the Edgefinder is built for all markets, and it's built for people who are both on the day trading side and swing trading side. It is really a data scanning tool that specializes in fundamentals, which if you are trying to get into fundamentals, I genuinely mean this when I say it, I don't know of a better tool on the internet for scanning fundamentals, specifically for FX, futures, commodities, indices, traders. This really breaks it down. It really makes it simpler to understand. And you also get access to some of the more popular reports on our tool, like the commitment of traders data. So we can take a look at the COT data. We can see on a week-to-week basis. It breaks this down for you, and it shows you which symbols institutional money is flowing in or out of. Are they buying, the S&P? Are they buying the GBP? Are they buying gold? Are they selling gold? Are they selling? So in the latest filing, there was just a slight tint of selling gold, but it's practically neutral. The SP500, they bought aggressively. And then we have NZD, GBP. You can see we've sorted it by biggest buying to biggest selling. So you can see some of the more sell heavy stuff, so on and so forth. This is the, again, reported commitment of traders data, but we've aggregated it and made it much easier to read rather than the big text file that just gets dropped once a week. That is hardly readable. So our software pulls all that data in, sorts it, and makes it clean and easy to use and understand. If you don't have this tool, again, it is 55% off right now. It's our biggest discount that we're doing all year long. That is the lowest price that we're doing. So check it out. Click the link in the chat. And that goes through the end of the day. So there's your chance to get a copy if you've thought about it. Okay, let's take a look at markets, see where we're at here. Post PPI, again, we had a cooler than anticipated producer price index here this morning. And let's see where we're at. We have, I think Ivan is going to join us in just a little bit here. We were going to have Kenzo, but I think Kenzo was unable to make it. So we've got a change in the lineup today. Gold is pulling back here. We'll see if it can find support here. That's the question. 2390 is pretty close. I'll stay in the trade if it holds the support level, and if it breaks it, then I will trail out. In terms of new entries, I just want to talk about this for a second. Is there anything that I'm looking for? I've said this a bunch of times, but I haven't been able to get my entry. I am interested in the Australian dollar on the US or on the long side against the dollar, but I haven't really seen my pullback set up for that. So nothing there. Pound USD, is there anything here? Same concept, waiting for pullbacks. Euro, I'd like to see maybe a break of this level here. That would be kind of interesting. Euro dollar, Aussie dollar, pound dollar. I already have a lot of index exposure, but I will just take a quick look at like maybe the Dow Jones. If we see a break of the highs, that could be a bullish signal, like a break of the highs retest. I like that setup. The NASDAQ, I already have XLK. I've given back, guys, a ton of profits on this move. This move yesterday, I think, wiped out like $7,000 or $6,000 on my position. But this trade has been going for some time. It's still very well in the green. And if it breaks levels of support here, if the NASDAQ keeps going lower, technology, which is XLK, that's the sector ETF, will probably trail me out. So if I take profits on it, it's been a really fun trade, and I admittedly will miss it. I'll be sad to see it go. But if tech keeps pulling back, I'm going to go ahead and take that as my chance to take profits. NASDAQ, again, like I said, looking flat on the day. But if it rallies from here, I'll stay in XLK. Otherwise, I'll get trailed out. If I do get trailed out, what's the next concept here? I may look at the NASDAQ a little closer, maybe around this 19, right around the 20,000 level, maybe. But that would be, you got to be cautious because there is a bit of a rotation trade going on. But I still like the bull side until something changes in this market. I mean, rate cuts are still something to look forward to for this market. We'll see what happens when we get there. We'll see if it keeps going from there. I'm not a perma bull, I'm not a perma bear. So I'm just trying to ride this momentum. If it pulls back, I'll look for setups. And if it changes directions more decisively, then I will stop out and get out of the way. So we'll see. In just a moment, we'll be taking a look at some more currencies with Ivan. He's going to be joining us on the show. So stay tuned. We will be back in just a moment. We're going to take a quick break, set up the live stream for him, and then we'll have him on. Stay tuned. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edgefinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right, and we're back with Ivan. Hey, Ivan, how's it going, man?
It's going all right.
Happy Friday to you. And what's going on? What are you watching today?
I think if I ever come to Atlanta, I would want to go to that beach.
Ivan, I hate to break this to you, but we are 5 hours from the closest beach in here in Atlanta. Yeah, with a green screen though, you can get anywhere you want.
Yeah, what am I looking at, you said?
Yeah, what's PPI came in a little hotter than expected today. What are your thoughts on it?
PPI, I'm not happy about the strength it came with because we have revision higher from last time, and then this time was higher than expected, and it kind of like collides CPI and PPI, and I want them to both be bearish, but hey, it is what it is, I guess.
Yeah, and it does take a little bit away from yesterday's consumer price index report, which was really good. You see a lot of markets reacting to this. You've got the metals. I mean, silver's down 3% on the day, completely erasing the gains from yesterday. Gold coming down here off this. The NASDAQ doesn't seem too phased by it. The S&P 500, Russell is just continuing to scream higher, and the dollar index, it seems a little unfazed too. Maybe consumer price index just takes the importance role for the day. You were looking at the yen. Do you have any thoughts on the yen today?
We had a discussion yesterday. Was that intervention? This discussion again today was the intervention when around, I think it's around 1 a.m. my time. So what is that? Your time, like 5, 6 p.m. or something. Is that also intervention?
I don't know. Wait. Okay, no, that was this morning. Oh yeah, I see it. Wow. I didn't even notice that until just now. That's a huge, what is that? I'm doing it here. 160 pips. Ivan, how do you even trade this thing? How can you, that's the hard part for me with the yen is like, what? You just trade and you're like, oh, I'll trade the Asian session. Boom, 160 pips lower, and comes right back in 10 minutes.
This is where the experts are divided between the amateurs and experts. Now, I haven't traded it. I haven't added a trade yet because it's not bullish yet. It has come down. It has dropped.
Sure.
I've seen people in the group say, hey, I'm buying it. It's 100 pip stop loss. And then bam.
Yeah. And even
That's
with a 100
way.
pip stop loss, that could really turn into 175 pip stop loss in a split second. Like the
Yeah.
slippage can be massive.
So the only safe stop loss is 1,000 pips, or not stop loss at all. You just hope that it goes higher after all. So, but yeah, no, that's what I'm looking at. Not necessarily for trade, but to warn about the risk that you don't see on the chart that is about that can happen in the future. That your stop loss, if it's 1050, 100, 150, is at risk that can be taken out. Can you afford to trade that? And I have said clearly, no, it is not worth it at the moment. Chill, relax, have a good day, go to the beach, come back on Monday. Because what I said earlier today, sorry, what I've said this morning is that if you are buying now, Bank of Japan or interventions tends to happen in about 2 hours on a normal Friday, or it can happen close or open on Sunday, Monday. So there's still a lot of risk out there.
Yeah. And it's a good point, because I would say, Ivan, that I still lean more on the bearish side of the yen. But as you've pointed out, even in this yen movement, right, which has been seemingly, if you look at a weekly chart and you say, look, okay, how can you mess this up on the long side? You still can, if you are, as you've pointed out accurately here, with these big swings, you can get slipped like crazy. You can still mess up this bullish trend if you are too short term and you are too heavy leverage. I mean, you could really seriously mess up. And don't even get me started if you have a real kind of suspended, convincing sell off in the yen, or in the dollar yen, you could get yourself into some trouble. So I kind of agree. I feel like if I'm trading the yen, I'm sticking to the higher time frames, smaller positioning, and gonna keep an eye on that economic data. But I think I showed you this. I think I showed someone else yesterday. I was talking to James about this GDP growth chart on the yen, and it's like this makes it very hard for me to be very bullish on the yen. When you look at their GDP growth has been consistently pretty disappointing. As we've talked about over and over, they have a population issue, they have a growth issue. Their bond buyback thing has been a mess. It's been unconvincing. I mean, I like the UJ. I like all the pairs against the yen to the upside, but as you pointed out, you can still mess it up if you're being too risky, right?
So my clear message is, at least for myself, stay out or whatever is happening now, let it be. But always remember that when things is dropping, that's when you're going to look for the bullish reversal or bullish direction, and so the bullish trend. But this doesn't scream bullish to me because it's dropping. So let it drop, let it do its thing, and then whenever that time is, whenever your system allows you, or whatever your statistics are, that's when you can start considering. Because I already seen people started buying. People love buying the counter trend.
Yep.
They have been hurt today, I would argue. And then, yeah. So just don't make it so difficult for yourself. That's all.
No, I think that's a good point, and I think that it's really important. I just got a chart pulled up here of the dollar yen on a 4-hour chart. The last time we saw some craziness in April here, and what you're pointing out, I think, is a good idea. Is when you have these big sell-offs, these big swing lows, they can really be fast and aggressive and go a lot faster to the downside than anyone thinks, right? If you were watching the dollar yen during this time, you're like, okay, this is what you're used to in terms of daily moves. And then suddenly you get met with this volatility. That is so tricky to kind of try and find a bottom in. But then once it starts to put in, these higher lows, once it starts to show its bearings, show that it's starting to do that drift up again, I feel like that's more of the move that I like too. So if I'm looking at dollar yen, my thought process would be probably similar to yours. I'd like to see this thing show, some wicks off the bottom. Like I'd like to see it close like it's closing right, or like it's trading right now, and see some breaks through some highs. And I don't care if I catch the bottom. I just want to try and see if I can catch another drift up. And the risk to reward on that could be very, very good.
Yeah. So back in 28th of April, this 2024, the max drop, give or take, was around 700 pips. So it dropped first time 500, came back, dropped again another 500.
Yeah.
Before it went higher. So, and I would argue, like in all simple manner, we are relatively on these candles at the moment, I would argue. So, sorry, yeah, one of those in this area. So, are we going to continue higher? Are we going to continue lower before going higher? That's up to the market. Don't force it. Don't what do you call it? Romanticize it. Don't fall in love at the moment. Maybe later, but don't marry setup like this.
Yeah, no, I think it's wise words. The yen is just a crazy currency pair. It's got so much volatility, and some people love it, some people hate it. I think that if you have the diligence, the patience to trade small sizing, the yen can be a really nice currency pair to trade, especially with this kind of decisive upward trend. Can it reverse? Can it change courses? Sure, it can. But so can the NASDAQ, so can the S&P. And this has been one of the easier trades in my trading career, has been staying bullish in this market, looking for dips, buying them, keeping my stop loss in play. And I've caught many, many good trades to the upside. Will that change at some point? It absolutely will. The yen will do something different at some point. The NASDAQ and the S&P won't move higher indefinitely. There will be changes in the wind. But as traders, you've got to, this is something I've learned over time, is trade what's in front of you. Just don't try and force what you want to happen or what you anticipate happening. Anticipation in trading is like so dangerous, because for me, it's like, I've missed a lot of these rallies this year anticipating a bigger pullback when I didn't know what the catalyst would be. When you don't have a clear catalyst for the S&P, for the yen, like what's a quick example on the dollar yen, because that's what we've been talking about. I don't see a clear catalyst for why the yen substantially gets stronger from here right now. And what that leaves me with is, I see a substantial story, that the predominant trend of why the yen could continue to weaken. We've talked about the data on that. We can see that. And is that a certainty that the yen will keep weakening and that the UJ and GJ and EJ will keep going up? No, it's not a certainty, but it's what's in front of us. It's the prevailing trend, and I don't see a clear path to that changing. So I trade what's in front of me. I trade what is clear. So long story short, I like to trend follow.
I saw an interesting thing. I'm an analyst, and I wake up before you, and I have already scoured around on the internet to see if I can find something interesting to you. I found on Financial Juice today the implied future interest rates in the next, what's going to happen in the next meeting. And if you talk about Japanese yen, currently the market is pricing in a 52.9% chance of nothing happening. But if you see Bank of England in their meeting 1st of August, 58% chance of them cutting, 77 for Bank of Canada, and Bank of Canada is, might be wrong, 24th of July, and then in September, a Swiss National Bank at 65% at this point is likely to cut. I didn't know that we were expecting to cut in Swiss, and also I didn't know that we were that high, that low on no change for Bank of Japan, because the lack of growth, they have inflation 2.8, but it's nothing in comparison to any of the other Western world or G7 countries has produced in the past 2 years. So to me, at least, I think that was a bit clarifying this morning.
The Bank of Japan, they want to hike to try and strengthen their currency, but they lack the growth. What a weird, complete different story to what other countries or other economies in the world are doing, right? I mean, we want to cut interest rates, but we have seen too much growth. We've seen a lot of inflation, and they want to hike interest rates because their currency's gotten whacked so hard, and they need more growth to support that. It's such a weird divergence. And the bet you're making if you're bullish on the yen is that they're going to get some explosion in growth. You're betting that they can support an interest rate hike. And will they hike? I mean, even if they do hike, I think they're just trying to get slightly in the positive territory. But yeah, it's a tough one for me to make. I really don't love the story for yen strength unless you get some sort of black swan change in the global kind of scenario, which I don't know that I can forecast. Well, I know I cannot forecast that. I know I don't know when that's going to happen, right? Black swan events are black swan events because they come out of nowhere, and it's very, very hard to predict. Like nobody predicted COVID,
There is one thing I want to mention though. The only thing that is going to make yen bullish is if Bank of Japan goes blind for economic data and only looks at the Forex rate against the dollar or other currencies. And that's the only way. And then it will hike in July for some absolutely real reasons. But also remember, OANDA isn't the guy that is looking at fundamentals first. He looks at seemingly the dollar-yen rate before he looks at anything else. So if that's the only way they're going to curb it, maybe. But he's a joker. He has surprised me before with complete lack of interest in fundamental analysis.
It's interesting too to me because I'm like, okay, let me look at the Japanese stock market here. And I say to myself, okay, if they hike interest rates, it's reversing but what we've been ranting about for so long, Ivan, here, because I'm thinking, okay, we want to see in the US, we want to see growth stay steady and interest rates come down. That's great for the stock market. But in Japan, they want to see growth pick up, accelerate, and they want to see interest rate hikes so they can kind of get some stabilization on the currency front. It's a different desire out of the Bank of Japan, but I'd be a little concerned if I'm sitting there and I'm looking at Japanese equities and we see an interest rate hike simply because the currency exchange is not favorable. However, the growth is not there. If you don't have growth and you're hiking into no growth or slow growth, that would make me really concerned for the stock market too. Yeah, that maybe I'm missing something, but Japanese stock market has been really strong this year. I mean, it rallied hard here recently.
Artificially strong.
Yeah, that's a good point too, because of all the stimulus.
It's all the
right?
money it's all the stimulus, all the money I pumped into it. I can't remember at the moment what the number is, but it's beyond trillions.
Yeah. So interesting.
And that's a number I don't understand. But yeah.
Here's Toyota. Let's look at Toyota stock. Toyota stock is up. It was up a ton. It came back a lot. Wow, actually, that's a huge drop. Since here to here, that's a 20% drop. Anyways, yeah. So Ivan, today I want to talk to the dollar for a second too.
Okay.
Dollar's been kind of making a bigger move lower. What gets us to break 104? What has to happen for 104? Or does nothing else need to happen, that we're just going to price action is just going to work its way down there? What do you think? For the dollar to push lower, what do we need to happen?
A beach.
A beach.
Yeah. Because this is basically the shoreline, and then we just need to drop it. No.
We need to go to the beach. That's the solution. I love it.
It's vacation time. No, seriously. I would argue if PPI today lower would have been the catalyst that I was looking for yesterday. And is CPI enough to do it? Maybe over time then. So not short term, but maybe next week or the other week. going into like end of July as a slow burner. So my answer would have been a weaker CPI, a weaker PPI, but we didn't get it. So right now it's just pure determination and brute force if you're going to go through 104.
Yeah, and I would agree. I think price action could just do it. You could just see, okay, we're going to see the rate cut still this year, and that could still kind of push the dollar lower. But I tend to agree. I was looking for that producer price index to kind of confirm the CPI rather than take away from it. I think it took away a little bit from it here today. But I made the point right after the producer price index dropped. I thought through it myself, and I said, this is why when we talk about the Edgefinder scoring system, the whole theory here is it's about the combined data, not one singular point. And so I think that you have enough evidence here. The Fed chair, I know that they say the team there at the Fed doesn't know anything about the CPI before it gets released, but Powell was so dovish this week ahead of the CPI. He was saying we see equal risk now to inflation and to the labor data / economy, and perfectly times that. He says that within a day or so of the consumer price index having its best move lower in months and months and months. We had a negative month over month CPI. I don't know. There's no point in speculating that because it doesn't make a difference for what we do as traders. But it does make me think, Fed, Jerome Powell seemingly really wants to cut interest rates. We got the CPI that we wanted to see. I think the story here for the dollar still looks very weak. And from a technical perspective, there's this one big lower high that we kind of formed here. It almost touched that 106.4 level and just completely evaporated all those gains. So I don't know. I think we could just see a breakout just because we've got momentum here. But that's a really big ask for the sellers because this level of support has been in play for some time. I'm curious, Ivan, on the dollar index or maybe other currency crosses. I really like the Australian dollar against the US dollar on the long side if it pulls back. Do you have any specific dollar crosses outside of UJ that you're watching?
Didn't we look at dollar Swissy the other day? Are we
I did
trying
every
to
day.
sell it?
I stare at it 3 hours a day.
And then CAD Swissy also trying to do something. And then New
Yes.
Zealand Swissy did something.
Dollar Swiss is
But,
moving
yeah.
lower here this morning. That's nice.
It's nice. It's nice to have some profits at least for a minute until it goes in against us. But just a bit of teasing.
I trailed my stop, Ivan. They can't hurt me anymore.
You trailed your stop? Oh,
Yeah.
you're such a good boy.
Yes, thank you. Thank you. I did the right thing today. I was responsible. Trailed that stop. No more of this today. And even if it does, then I'm not going to stay around for it. It's Friday.
Oh, I'm the one with 100 pip stop loss on, and I got dragged a bit in your chat because I had 100 pip stop loss, and they're like, "What is that about?" And I'm like, "Dude, just listen."
Yeah, I've gotten longer and longer term in my stuff over years. Like the more fundamental I get, the more I'm not long term, but I don't do day trading. I don't do scalping, and it's not that I have anything against those things, but I just feel most comfortable letting data roll in over like a few days, maybe a week or two, way more than I liked. I like trying to play the day's catalyst. I mean, there are certainly ways to day trade fundamentals. Like if you have a good CPI day and you recognize that, you could probably take some day trades off of it. I'm not taking anything away from day traders, but you got to find whatever works best for you. So anyways, keep going. You were looking at the dollar Swissy. You were looking at what else are you looking at?
Australian dollar against the US dollar, if dollar continues to weaken, would be a nice little trade going forward. But I want like 0.67 maybe. Or 0.6750.
I was kind of upset I missed this one. I loved that setup, and I marked it up. I put it in the chat, and it just didn't give me that pullback.
Is that your candle that you're supposed to take?
Yes, that was the candle that I cried when it left the station without me.
Yeah, that's a week ago, bro. Like
I'm still
you're late
crying.
by a week.
I'm still crying
Yeah,
from a week ago on
yeah.
that.
Yeah, continue to cry. It's good for you. It's good for you to cry a bit more.
It's good to cry. It's good for you. There's health benefits, okay?
Okay, so a bit serious. I'm just gonna say, and you're probably gonna be like, ah, Ivan again. But I am like very settled on S&P at the moment because we've hit target, we've hit target, we've hit target. You probably have hit target before this as well. And when that happens, we either slow down or we go sideways. So I don't see any. It shouldn't continue higher from now on S&P. So now I'm hoping for 54, but I don't know what's gonna make it go down to 5,400. Maybe
Yeah.
I don't know, bombshell somewhere. But yeah.
No, I agree with that
So
sentiment. That's where I was saying earlier. It's like this move in indices. I don't know what the catalyst is to reverse course. The only thing I could speculate but not predict would be like weak earnings. We had actually I didn't even check this. We had JP Morgan earnings this morning. We had which no real reaction here, well, back and forth reaction on JP Morgan. So we had banking earnings here this morning. I'll have to look into that to see what like consumer savings are looking like. That's a really important indicator out of bank earnings. So yeah, I didn't think about that. But the S&P 500, yeah, to your point, I don't see the catalyst to bring it down right now. When it happens, I will probably be a buyer unless there's something substantially changed in the bull case.
Yeah, I'm just trying to see if there was anything in particular.
I think you had Citigroup also. Did Citi move? Yes, Citi did move. Citi's up 2% pre-market, which is it's not a ton, but it's a good move for a bank stock. Citigroup. Did we have Wells Fargo? Let's see, Wells Fargo. Yes, Wells Fargo's down 6% pre-market. That's worth mentioning. So some bank earnings here this morning, kicking off earnings season. That might be the catalyst. I mean, what would be a bigger catalyst for a push lower in the stock market? Could potentially be earnings. Like if earnings disappoint on the big tech level, that could be a little bit of a concern. But I'm not predicting that because they have a track record of beating earnings, so it's like really hard to try and predict that too. So I think that's why the stock market's up so much. Inflation's coming down. You've got growth that is slowing but not crashing. It's a bullish market, and I'm trading it until it's over. And when it's over, you got to get out of the way. You just gotta trade what's in front of you.
What's going on? Am I wizarding here? Like, what's going on?
Oh, is UJ making another tumble here as we speak, Ivan?
Yeah.
Oh my goodness, it is.
Like, we weren't paying attention, but that's like within the last 2 minutes or so.
120 pips on UJ. You kind of called
90.
that, Ivan. You kind of called that it's done several times.
Chat, why are you not looking?
Oh my goodness.
Max B is the only one that says GPY again, but that was 10 past. Okay, you were in time. So I was not the one. Thank you very much, by the way, Max B, for giving it my attention. But also this is live developing, and it's in can continue lower and come back up again. But okay, let's look at, when I look at dollar, I look at dollars. It's okay, cool, guys. Then I'm okay. Then this one just going to continue falling, as I said like 10 minutes ago.
Yeah, I mean, you did
careful.
say you got to be careful about trying to time these bottoms, because look at that. There it is, back to the fresh or very close to fresh lows. Dollar index also coming down, just accelerated to the downside around the same time here. Look at this. Dollar index lower. So you got dollar index lower, you got JXY moving higher. That's the Japanese yen. Gold is pushing back up, reversing course. Love to see it. And stock market is just, stock market's doing things. The fix is actually lower. Silver reversing course, oil yields dropping off that. It's interesting stuff. Ivan, as much as this is a great moment for us to continue watching, I do have to kick you off. We got our next show guest coming on, so get out of here and we will never see you again, unfortunately, because we're going to the beach forever after this. So see you forever.
Okay.
I'm just kidding.
See you.
Before Ivan goes, let me give him his spot in the sun here, since he wants to go to the beach so bad. Ivan has his own coaching service, if that's something you're interested in doing. He did offer. Did you have any more free slots, Ivan, for coaching?
Well, not for today, because I'm going to work until midnight today.
What's wrong with that? Americans do that every day.
So many. Well, okay.
I'm kidding. Maybe in the future, but in the meantime, if you guys would like to
On
check out
Monday.
Ivan's YouTube channel, boom, there it is. Go subscribe to Ivan FX on YouTube. We've dropped a link there in the chat, and we got some thank yous coming into the chat here for Ivan. So, Ivan, thank you for coming on, and we will see you next week. Have a nice weekend, man.
Have a nice weekend.
See ya. All right, guys, we're going to take just a quick break again here, and then we're going to be bringing in Nick Phillips for another round of market analysis with our next host. Just briefly before we take a break here, I just wanted to mention the Edgefinder sale is ending today. The PPI sale is 55% off for the day. If you've been thinking about getting a copy, here's your chance, 55% off. We're going to drop a link here in the chat while we wait here on this break. Make sure, if you have not already picked up a copy and you'd like one, 55% off is a massive, massive savings on the tool. It is a one-time price to pay. And if you're looking to up your fundamentals game, we got a team of people specializing in building data for traders. So pick up a copy. We just dropped a link there in the chat. We'll be right back after this break. We'll get the stream set up for our next guest, Nick Phillips. Stay tuned. All right. What's up, Nick? How's it going, man? Welcome back.
What's going on? How you doing, Nick?
Good. We had another interesting move here in the markets following yesterday's consumer price index. The producer price index came in a little hotter than expected. Took a little bit of a turn from yesterday's really good inflation figure. Swapped in this one, which is not so good. But you've got kind of a mixed report, and overall the market seems to be shrugging off the producer price index, and the dollar index continues to move lower. What are your thoughts? What are you watching here this morning?
Yeah, so I actually I got involved on the future side. I was watching you and the last guest talk about UJ. I got in on the future side of UJ.
Oh, nice.
Which is just Japanese yen futures to the upside. I was actually down in this area before we got this nice little push up. So this was a really good trade for me this morning. My reasoning behind that was simple. It was a follow through of the CPI pricing in effect from yesterday, combined with the yen intervention moves and how that's affected the value of the yen. But yeah, basically, I saw the markets shrug off, as you said, the PPI print relatively quickly, and kind of figured going into this, I was like, even if PPI comes out hot, I don't see the market caring more about it than they cared about the CPI print.
Sure. Yeah, that definitely was the right thought process today. Producer price index did move some things around, but quickly snapped back a lot of the gains and losses. And, the dollar yen here is definitely like the chart of the day. You've got this thing just moving so violently here. Look at that in the last 15 minutes. My goodness, just a crazy sell-off. And even overnight during the Asian session, we saw a similar shoot lower and then reversal back. Yesterday's ginormous move right around the CPI print. I mean, it is a volatile currency, to say the least. And, I guess what's your, do you have a bigger term thesis on the yen? Are you more on the bullish case for the yen overall, or are you more bearish? What are your thoughts?
So at the beginning of the year, this is similar to the dollar, where at the beginning of the year, I was more bullish on the yen and bearish on the dollar. So I was sort of sitting around waiting for UJ downside. And then we got a hike, the historic leaving negative rates situation out of the yen. And we just saw the yen continue to dump. And I was like, man, so that experience kind of shook my underlying belief in the yen strength, combined with the fact that since then there have been multiple confirmed and unconfirmed cases of yen intervention that still couldn't like keep yen strong. So I don't know if my bigger picture idea is yen strength. Like I'm not confident enough to say that I believe in the fundamentals of the yen yet for a lot of strength. What I do think is going to push something like UJ to the downside, or JPY futures to the upside. I'm looking at the British pound. JPY futures to the upside is continued significant weakness out of the dollar.
Yeah, sure. That makes good sense.
That's where I'm thinking we're going to be getting moves like UJ downside, Japanese yen futures upside is going to, not that the intervention efforts from the Bank of Japan or from Japan aren't going to affect the yen strength. It's just they've tried it a bunch of times and it hasn't held yet. So, I don't know. I don't have a whole lot of faith in the yen.
Yeah, and actually to your point there, actually I wanted to point out that on the Edgefinder, which is our software, you actually pretty much pointed out the theory here on UJ here. Let me just if we could switch over to my screen, Chandler or James, really quick. Let me just show you this. So UJ is actually getting a bearish reading on the Edgefinder, and as you pointed out, a lot of that is not necessarily about the yen as much as it is just the dollar, showing a lot of different economic prints that are more on the bearish side. So, if we go really quick, I'm just going to show this on let's go category. We'll go major currency pairs. And if we take a look at UJ, you have, GDP, MPMI, which is manufacturing, services PMI, retail sales. A lot of these factors are slightly leaning in favor of the yen, not necessarily because they're rock star for the yen, but because data in the US has come out a lot less than forecasts recently. So you're getting this reading on UJ. And for me, I'm still very hesitant with trying to get short UJ, simply because I think that if I'm bearish dollar, there are other plays that I'd prefer to make than trying to play the yen. I like the gold kind of thing that I've been trading for some time, and even maybe like the Australian dollar against the US dollar. But it is interesting to watch to see what that yen does. I mean, it is so violent, and trying to find the bottom on this has been probably trickier than many people had anticipated.
Yeah, absolutely. I think like you were mentioning the Australian dollar, that's a great opportunity, especially with the divergence happening between the two central banks right now. Something that's interesting with regards to CPI is I shared this blog post yesterday, and this is a public blog post. I just went over sort of a question, I guess you could say, about CPI. Is this enough? Is that like we're starting to see the markets price in over 90% probabilities of a rate cut in September? Is this enough for the Fed? Because they've been saying, Jerome Powell keeps saying, the Fed wants to have more confidence that inflation is sustainably moving lower. But he has yet to quantify what that means. How many prints? How much consistent lowering CPI? How much consistent lowering inflation do we need to see in order for the Fed to be confident?
Sure.
Right. So this is a interesting chart here. The core monthly CPI has been stuck in this range since September of 2023. However, over the last 4 prints, we've seen this consistent move to the downside.
Yes, exactly.
And then the exact same thing, very similar thing on CPI year over year. Been stuck in this range since July of 2023. We're still in that range, but the last 4 prints have been consistently lower. So
Yep.
I'm wondering, is this enough for J Powell to go ahead and say, we're good to go?
Yeah, and I think my opinion on it would be most likely yes, because the other thing too is that the trend to the downside that's picked up in inflation is one side of it, but then you also have the trend higher in unemployment rate. And they, in the meeting that he had this week, or the press conference that he had this week, or not press conference, the Capitol Hill meeting they had this week, he pointed out that he kind of saw an equal concern on both sides of the mandate with both the inflation story as well as now in equal tandem the economy, the state of the economy, the labor data, et cetera. So it will be interesting to see. But as you mentioned, inflation showing some real progress this week overall. The labor data and PMIs and stuff in the economy readings have been coming in light, and that has been picked up on the Edgefinder very much so in terms of the scoring. It's been a lot of dollar bearishness based on weaker U.S. prints compared to forecasts. That's how it pretty much looks at all the different forecasts relative to what actually comes out. It's showing patterns of beats and misses, and that's how it's kind of finding its bias. So yeah, should be really interesting to see where we go from here with it. But I do think rate cuts are likely on the table in September. We'll see if something changes between now and then. But Nick, if you're cool with it, I'm going to leave you to take over the show for a little bit. Just go through whatever you'd like to in terms of if there's trades this week that you want to walk through. How long would you like to stay? I can give you 15 minutes, 30 minutes, 10 minutes, whatever you want to do.
Yeah, I could probably, I'll run for another 15 minutes.
Okay, perfect.
All
Then
right.
I will join back with you in just a minute then.
All right. Sounds good, Nick.
All right, man. See ya.
All right. All right, guys. So I'll touch on a couple things here. And if you guys want me to take a look at anything for you, go ahead and drop it in the chat and I will pull up that chart and check it out for you. So as far as Doxy goes, I think earlier this week, I was talking to you guys, I believe on Tuesday, and we were hanging out in this area. And my thesis at that point was that we're going to continue lower, especially if we get the right data out of CPI. And sure enough, we got the right data out of CPI and we're heading lower, hitting the targets that I mentioned earlier in the week at the 104 level. I couldn't say whether or not we're going to break below this level. You can't make a prediction like that. The market's going to do what the markets are going to do. I do think that if we continue to get weakness out of the data and we see a break below this, we could be headed to a next major level being down in these areas here. I would be targeting first like 103. The 103 area would be not a bad area to target if we're getting breaks below here. Personally, I'm not swinging anything dollar-wise. I'm always scalping. So I'm looking for the little moves like I caught this morning on Japanese yen, where my target was I got in right in here, and my target was the top of this range. But as soon as we started to approach that, the market just flew past it. So, I'm not super interested in staying in for hours and days on end. I want to get in, take advantage of a quick move in the day and walk away for the day. But I like to get this overall view of where I think the market is going on a bigger time scale. So that when I zoom in, I have a bias, I have a direction I'm looking for the market to go. And if I'm just scalping without economic data, cool. But if I'm scalping with economic data, I have that catalyst behind me in the direction that I want to see the market go based on fundamentals and technicals. Let's see. All right, got quite a few requests here, I think, for something. Let's see. GBP CHF a few times. What am I expecting from XAU USD? It's pretty much the opposite of what I'm expecting out of the dollar, but it's tough because we're at all-time highs on gold. We are at a significant level here. This one's tough. I think it's easy once we're making all-time highs to continue making all-time highs, but I personally don't like to buy into all-time highs. I don't like to get involved in trying to buy it past this resistance level. I think potentially, as we're waiting for more US data, we could see something like this, maybe a little bit of a bull trap before it breaks back down into here, consolidate some more as we're waiting for data. And obviously, it's not going to take this long to get more data. But gold's a tough one. Gold's a tough one, seeing as, you know, we're at the levels we're at. Just not something I'm super interested in buying. Now, if we do get a situation where gold does retrace back into these levels, but we follow up with more dollar weakness data, then I'll be, you know, I wouldn't mind scalping out of here, even scalping out of mid-range, somewhere in this area where we've got this touch. Not really that touch, this touch and this touch. You've got 3 solid areas where price has reacted decently off of this area. So, you know, 23.5-ish or 2300, buying out of those areas wouldn't be a bad idea, but my target again would just be these highs. So as far as gold is concerned, gold upside, but I'm not willing to put any liquidity behind that move because of where we're at positioning. Second born, are you talking about gold or are you talking about the dollar? When you said ignoring the data for a second, doesn't the daily look bullish looking at equal lows? How do you determine tightness of stop loss in terms of market structure and liquidity and scalping, since price tend to make bigger moves? So for me, it's all about structure, right? Structure's fractal. So I might take, like this morning, I'll go into this JPY trade. Now, this trade ended up being much bigger than I anticipated. Like I was saying, I was anticipating getting out sort of at these highs. Let's see. And I scalp off of like sickeningly low time frames, 15, 5, and 30-second time frames. I'm watching everything. If you see this chart, I tend to watch the 5-second, 15-second, 1 minute, and then this is my like rotation chart where I'll rotate through higher time frames to monitor how things are playing out on everything basically higher than the 1 minute. So let's pull up this 5-second here. All right, so a couple things. When I got to my desk this morning, I watched PPI come out, wasn't willing to get involved in the market at that print, and waited to see if the market was going to fade those numbers. And sure enough, it did. Now, once price created this little bit of structure here and then broke past it, all I was waiting for was the market to come back in to test these resistance levels as support. Sure enough, we got it in here. I actually bought right here with my stop loss below these lows here and was intending to get out here. But as the market kept pushing, I just held. But the idea here is structure. So how do I place my stop losses? First, manage your risk well to where if you're going to take a loss, it's not going to be a big deal. When you're scalping, you don't want to be throwing the whole bag at a move. I mean, I don't think you want to throw the whole bag at a move anytime you're trading, but especially when you're scalping, you're just going for, you know, like I risk less than 0.5% per trade. Most of the time it's less than 0.5%, 0.25% per trade. So the idea here is I'm getting in, I'm setting my stops below these levels here, and then I want to get out. I'm going for 1-to-1s most of the time, right? In this case, I ended up getting like a 1-to-3 or 1-to-4 up in here, which was, like I said, a really nice move. But the idea is structure. We have these lows, prices creating this leg. As it's creating this leg, we have a low, a high, a low, high, low, high. So as price starts to come back into my target zone, okay, and I see it's rejecting this zone, I got in a little early maybe, but I want to set my stops below some of these structure points. Now, if price had broken too far below this, I may have gotten a little nervous and I may have cut my losses short before it hits my actual stop. But the idea is structure. Do oil prices and gold move the same direction? I want to say yes. I fundamentally, there are things that affect oil that don't affect gold, or things that affect gold that don't affect oil. So it's not 100% correlation. More scalping this, it's like Russian roulette. It's really not. It's the same structure. For me, the reason why I'm able to scalp on these lower time frames is because I'm trading futures, and with futures, my spread is super low, my commissions are super low. So my cost per trade is incredibly low. I'm able to, like, I always wanted to scalp like this with Forex, but my spread on something and commission would be like this big. And so, that's actually a big part of my move. And the way that it's not Russian roulette is that I do have fundamental real world reasons for getting in. I'm not just getting in the Japanese yen on a sell because it tapped into these areas here. That's just like, oh, it tapped into a price area, let me sell it. It's like, no, I don't want to sell it. I'm looking to buy the Japanese yen because of the interventions and because of the weakness out of the US dollar with the CPI, and because the US dollar quickly faded the PPI hotness from this morning. So you've got all these real world things that are happening that are affecting the value of the currency. I want to be involved in the move to the upside. So it's just like anything else. It seems a little scary because it's such a low time frame, but if you look at, 15-second or the 1 minute, it's just structure. We had this move to the downside. Imagine this is the 1 hour. We had this push to the downside. Market came up, created a bit of a high area here, pushed past this high, tapped into the previous highs, gave a retest, gave a retest of this previous resistance and continued to the upside. It's simply just market structure. That's the only way that I really look to get in technically. But I always create a bias based on fundamentals. I don't like to just get into something because a technical chart pattern played out, because technically here's a head and shoulders to the downside, right? Shoulder 1, head, shoulder 2, you got this boom, head and shoulders pattern to the downside after touching into these all-time highs. If I'm a technical only trader, I'm taking this, right? But this is against my bias. This is my fundamental bias is yen upside. Jay Hennigan, I recommend futures and I recommend Tradeovate. Tradeovate would be a good option for you as far as a broker for low time frame trading, such as a 5-second or 10-second. Now, you guys have to, definitely be aware that when you're trying to trade like this, you're going to be tempted to just take anything and everything because price is always moving, right? So go into this with you have to be very picky. You have to wait for the right moments. You want to make sure you have a good thesis. Every trade needs a good thesis, right? So my thesis here, I can explain to you exactly why I wanted to get in this trade at this point in the game. Again, CPI, doxy weakness. PPI moves were faded. Japanese yen intervention. All of this gave me a bias to want to be longing the Japanese yen. This is the exact same chart as shorting UJ. Cool. So I got my bias. I've got my thesis. Now I need to get my entries. Had I gotten stopped out here, I would have simply waited for price to give me another bit of structure showing me that it wants to go to the upside, and I would have taken another stab at it. Just be careful and be safe. Practice a bunch before you actually go live is what I would recommend. Okay. GBP USD. Pound USD for me, I'm looking at the pound futures. It's the exact same chart as pound USD. Let's go. I'll go to the 10-minute, show you guys what pound futures looks like, and then I'll pull up pound USD. Boom, boom. Same chart. It's just scaled in a bit. But we can hang out here GBP USD if you guys want. Pound for me has been interesting. I haven't been involved in any of this pound upside. The last time I was looking at pound, we were hanging out right here, and I did not want to be involved in it because we were at these highs. Actually, let me remove all these drawings. So we were hanging out near these highs. I'm not interested in buying things when they're at resistance levels. So I did not want to continue to try to jump into this. I wasn't seeing anything fundamentally out of the pound that was making me want to get in on buys. The only thing that would maybe entice me to get in to buy this to the upside would be USD weakness. But as far as where we're going from here, it looks like, simple price action to the upside. Continued dollar weakness. This isn't my favorite pair to be buying right now. But if I was looking to get involved in the pound, I would simply be looking at structure. We have a low here. We have a high here. So basic market structure. If price comes back down to retest this, you're going to want to get involved somewhere in here, right? That's how I would handle anything with the pound. So for instance, let's say we had a piece of data coming out next week that could influence me to want to get involved in GU upside. What I would do is I would want to see price come back into this area, somewhere between these two levels. Okay. And then I'll drop down to my lower time frames and I'll let price give me the structure I need to see. I want to see it creating lows, break that low, try to go down again, reject that, maybe try again. Can't quite do it. Buyers are coming in, and then I'm getting in long. So what do you expect the next move to happen? I love your opinion. I've been trading for 5 years, but always love to hear you. I appreciate it, man. What do I expect the next move on GU? I mean, my bias about pretty much all USD pairs right now is everything against the dollar. I have a bearish bias for the dollar. However, we are at major levels. So do I want to be getting involved right now on a lot of this stuff? No. I mean, look at the Doxy. Look where we're at. We're at this support area here. We got 1 tap, 2 tap, 3 taps, 4 taps, 5 taps, 6 taps, 7 taps, 8 taps. If we break this level, again, I said this earlier, if we break some of these support areas, absolutely, I think continued Doxy downside is something I would be looking for in these areas to go lower on a scalping basis. Yes, I trade news. So I trade news and then I trade the follow-up of news. So what do I mean by that? I mean, we got CPI yesterday. I traded the CPI release. And then today I traded, I traded the follow-up of CPI release. Typically what I do is I get involved as soon as the data drops within the first 5 to 15 seconds. I'm in, and then I'm usually out within a few minutes. Yesterday, when CPI dropped, it came out with unemployment data that was a little warm, so I didn't trade it immediately. I ended up taking a follow-through trade later in the day, but most of the time I take it at that catalyst.
Hey, Nick, thanks for taking over for a little bit there and answering questions and just adding value to the show as always.
Yeah, no problem. Happy to be here.
Yeah, well, for everybody who was just listening, if you enjoyed Nick taking over there for a little bit, he has his own social media and content that he puts out. If you guys would like to find him, we'll drop the link there in the chat for you. You can click that link. It'll take you to his socials. You can send him a DM, let him know you found him from the show, that sort of thing. And Nick, thank you very much for coming on today. And man, have a good weekend.
Thank you so much. All right, guys.
All right, man. See ya. All right, guys. Let me just share my screen here. We can go. There we go. Okay. We got Chris coming on in 15 minutes. I'm going to try and just walk through some stuff I'm looking out for. So give me a moment here. All right. Let's go through some stuff. Okay. So this week has been an interesting one for me personally because I have not a lot of entry triggers happening, but a lot of positions moving nicely, which I guess is an ideal week. I would rather be in a week where I'm trailing stops than taking a bunch of entries, but that's been the theme for the last week or so for me. I've not taken a lot of trades, but I've been looking. So let's do a round of looking together and I'll show you at least what I'm looking at. So if we just go down the list, I'm going to show you how this top setups page works. I hope that it is beneficial to you. If you're somebody who's thinking, maybe I would purchase the Edgefinder if I understood a little better, take this as a demo. And this is genuinely what I do every day when it comes to looking for setups. This is my procedure. You guys ready? It's pretty simple. The Australian dollar is getting a bullish reading. So we'll go through some of the bullish setups first. So if I look at the Australian dollar here, I like this one to the upside, but I still would like to see price action pulling back. So this brings into kind of conversation the first thing that the Edgefinder does. It gives you a directional bias. It doesn't tell you, oh, buy here, sell here. It's not a magical formula box. It's simply a tool that helps you look at a lot of different economic data, as well as the commitment of traders report, retail sentiment. It's automatically updating this information and giving us readings. So the Australian dollar against the US dollar, generally speaking, the Edgefinder has been right about the direction on the Australian dollar. It's been very bullish. But for me personally, in my style of trading, I haven't been able to get an entry on this one. Since this breakout here, I've been saying, oh, I would love a pullback, but I haven't been able to get one. So when I look at the Australian dollar, I say, okay, I probably missed that one for now. If we get a pullback, I'll pay closer attention. But this is my procedure every day for looking for trades. This is how I find it. Edgefinder, step 1. And step 2, 3, 4, 5, 6 is all the Edgefinder. The Edgefinder is king. Can you tell that I am a fan of our own work? The answer would be yes. Next one is US 10T. US 10T is US 10-year Treasury bonds. And I already have a position on bonds on TLT. So this is a trade from the Edgefinder. So this is a trade that I've been in for some time. So I can't do anything on this one, but what I'm looking for with the 10-year Treasury, I'm looking for continued. Why are my trend lines so messed up? Okay. I'm looking for continued upside. If we break higher, that would be great. But this is one that's been sitting in my portfolio. It's more of a position trader, not a position trade, not really a momentum trade or short-term trade. So the Edgefinder has been pretty spot on with this one. Overall, it's been bullish, but it's been taking its time. Next up, let's look at EU and GU, both getting bullish readings on the Edgefinder here today. Let's have a look at the daily chart. And again, this one is looking a little overextended for me to get long, but I am bullish overall. So for the euro, what would I like to see here? I would love to see a breakout of this structure. And if we can see that, then excellent. Then we have potential kind of breakout on a bigger theme, right? So if you get something like this, then absolutely, I like that trade a lot. But I need to wait and see that breakout. So again, step 2. So step 1 is for me Edgefinder bias. What are we looking at? What is the economic data generally pointing towards? Then it's looking for setups. So if we take a look at GU, that's the next one on the list. Again, Edgefinder bias has been very correct, but I'm not in this trade. I'm looking for pullbacks. Now, this is, for those of you who are just joining in the show, my goal here is just to show you how I actually use the Edgefinder personally. There are traders who use it differently than me. There are people who use it more on a swing trade side, more on a day trade side. There's even people who scalp the markets with the Edgefinder as kind of their data scanning software. So we'll keep going. The Dow Jones, is this one potentially setting up? I mostly trade the daily chart and the 4-hour chart. So I am kind of just keeping an eye on this one. Same concept. We're pressed up against a level of resistance. If we break out here, I think you have nice fundamental support that we do continue to see higher highs. So I am bullish on the Dow Jones, but waiting for the technical setup. Trading is genuinely a lot of waiting, and this is a good example of what I mean by that. The NASDAQ, what about the NASDAQ? So the NAS is pulling back, and I like this one to the upside. I am already long XLK, which has very high correlation to the NASDAQ. I've been in this one for some time. This has been a really good trade for me, trading the long side of technology, which the NASDAQ is a very tech-centric index. So I already have this trade. So this is another trade found partially by the Edgefinder and then looking for the technical setup. I entered over here, missed my stop out, and we've continued to push higher overall on tech. So I like this one a lot, and I'm staying long. I've got my stop loss trailed in profits on this one. If we break lows here, I need to get out of technology, but I like the tech side. Despite yesterday's big rotation, my preference is to stay long what got us here in this rally. That is technology. That's my opinion. I could be wrong about that, but I state my opinions every day. Sometimes I'm right. Sometimes I'm wrong. I'm not here to do your homework. I'm doing my own. That's what I always say. This is not financial advice. Keep going. Gold. You guys probably know I am long gold since I never shut up about it. Gold is my biggest position. And by the way, here are all my, trades currently. I'm long gold. All of these are Edgefinder setups. Everything that I'm trading, Edgefinder inspired. Okay. Now it's not telling me when to buy it. The Edgefinder is showing me the data. I'm making the decisions on my own to go purchase or sell certain things. So gold continues to look good for me. I've got my stop loss trailed on this one too. And if this breaks, then we need to get out. That's my approach. So gold has been a setup on the Edgefinder pretty much all of 2024. It's been a bullish reading on the Edgefinder, and I've been trading it pretty much exclusively on the bullish side all year long. Okay, so you can kind of see my dilemma here, and not really a dilemma. I'm in a good spot. I don't have any trades to enter. I'm just managing the ones that are working well. That's an ideal spot for trading, and I am not always in that position. I certainly wish I was all the time. It would be so nice, but that's not realistic. NZD USD is the next one on our list. Let's have a look at the Kiwi against the US dollar to see what biases or see what setups we might be able to find here. Don't love the chart. If I take a look at the 4-hour chart, still don't love the chart. Very choppy. Both central banks coming out a little bit more dovish this week. Don't love the setup. So Kiwi is going to be a skip for me and not a technical setup. S&P 500, we've already talked several times about the indices. These things look strong to me. If we take a look at SPX, for me, no clear support up in these levels. If you got a bigger support level hit, I'd probably be a buyer, but not quite where I'm ready for it, right? Just everything seems to be trending very well with momentum. If you're in those trades, you're having a great week. If you're not in those trades, you're feeling a little FOMO, and that's okay. We just wait for setups. We have to be patient as traders. It is imperative. Now, the neutrals I'll skip because neutrals, I don't have any bias. I have a slight bullish bias on the DAX or the FTSE, slight bullish setup on silver. I am already long silver, but because I'm already in the trade, I'm just trailing stops. And this was a bullish reading earlier in the week. Okay, let's skip down to the bear setups, USD CHF and USD JPY. Now, USD CHF, I'm already short. Again, you can see all of my trades are inspired by the Edgefinder. 100% of my trades that I talk about on the show, on the stream, are Edgefinder inspired. I use the tools that we sell. So USD CHF, I've trailed a stop on this one too. Markets moved lower, but there's no setups. The reason I'm doing this, guys, is because sometimes people join my streams or my comments and they'll say, Nick, talk about a new trade. Talk about a new trade because you're only talking about the trades you're already in. I'm showing you my entire process. This is all I can do. I talked about all these trades when I joined them, and I've also had some trades that didn't work out. Like I was long Bitcoin, that didn't work out recently. I was long energy, XLE, that did not work out. Took a loss on that one. So finally, USD JPY, let's have a look at this. USD JPY, do I want to sell this one? Edgefinder gives me a bearish reading, but I'm very cautious with yen because it's such a spiky and super volatile currency pair. What I'd have to see is lower lows, lower highs. I need something more convincing, and I don't see that just yet. Technicals still look bullish to me. So no setups there. So do you see I hope you can see my dilemma. Again, it's not really a dilemma. I'm just trailing stops, but I don't have a bunch of entries to make because I'm following a system. I do this every day, same approach, nothing changes, day in, day out. And I hope that was helpful to you. The point of that is, again, to show you kind of what the actual day-to-day process of using the Edgefinder looks like for me. I'm scanning these charts, and pretty much I'm only looking at things. Whoops, I don't want to go to the help section. Go back to top setups. I'm pretty much only looking at things that have a bias. So this would be my watch list for the day. And personally, I don't really trade minor currency pairs. So that's my watch list. Those are the trades that I would potentially look for if I could get a technical setup that gives me a good risk to reward, and I'm done for the day. So technically, if I wasn't working a day job building software all day long, I would be outside probably walking a trail with my wife. But because I'm a workaholic and I like building tools and I have a background in software, after this, we'll be working on software all day. And honestly, I love that. So that's my approach to the Edgefinder. Trading wise, I'm done for the day. Like there's nothing else for me to do. There's no new entries. There's just trailing stops and letting it run. And it's not always in that situation. Like I wish I always had just runners running, but I do currently, and that's nice. So we'll let those do their thing. NASDAQ bouncing nicely here today. We'll see if that one wants to continue. Last thing I will say, I just walked you through it. If this tool sounds like something you would like to get a copy of, we have traders all around the world using our software to improve their fundamentals game. If you'd like to use the same tools that I do in all my videos, live streams, and as well as many other different people who come on the show who use the tools and traders around the world using it. If you would like a copy and you'd like to support our mission to build the best fundamentals tool for traders in the game, get a copy of the Edgefinder. It is 55% off. It's ending today. We did yesterday and today our CPI and PPI sale for 55% off. If you'd like a copy of the tool, we'll drop the link here in the chat for you. Click that link, chat with a rep on our team, and you can get access to the Edgefinder for 55% off. That is the lowest price that we're doing all year, and that's ending today. So take advantage. Don't miss it. Boom, there's the link. If you have any questions, feel free to speak with someone there also qualified on the technical side to answer any questions you have about how the tool functions. Again, I've got people to help me out with that. So yeah, there we go. And in just a moment, we're now going to transition. We got our next show host. We got Chris coming on here, taking over, walking through some charts. And Chris, if it's cool, I might need to just let you kind of take over the show for a little bit here. I got to jump on a call pretty soon. So you got it. I will listen back to your thoughts because I am curious. Chris can hear me. Chris, is tech just going to rip today? That's the question I'll leave you here with. Is the PPI going to take some wind out of the sail? Hear back from Chris. He'll take over the show just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Friday. Is tech gonna rip? I think the answer to that is we'll see. What I'm really paying attention to is this. The market is trying to just shrug off what happened yesterday because it was pretty much bizarro land, which I thought was interesting. Check this out. Why does my screen? All right, hang on a second. Screencast is going away. Give me a quick AV check. We're coming through loud and clear. This was what yesterday's heat map looked like. So a couple of very interesting things. You look at Wednesday's trading, where we had a bit of a pop off top, and the market was pretty directional on Wednesday, and nothing really happened in a bad way. Everything was up for the most part. We had 11 of 11 sectors closing green. And then all that flipped where we had the storied can do no wrong, the greatest stocks in the world to ever own, the reason the market's up this year, everything was red. But everything else was okay. So I call it bizarro because what's been working and this like highly concentrated narrow market completely flipped yesterday. And the nice thing is after this happened, I actually had one of my best days ever yesterday, and I reached some new watermark highs on all my portfolios that I manage. So I can say I was fairly prepared for that to happen. Now the question is there going to be follow through? I think right now the market is stoked to have trending lower inflation data and loving the fact that the probabilities of the Fed watch or the Fed watch tool keep going higher. The Fed rate cut probably happening in September. We'll find out, is this a rotation away from the Mag 7? Maybe. I think your big key and takeaway is, okay, so the SPY's up a little bit today. We opened up around 557, which means we just kind of contained the damage a little bit, but we're not making highs yet. Here's the intraday price action. So for this week, we've had one big directional day, right? We had Monday, very quiet. Tuesday, very quiet. Wednesday was a directional day. Thursday was a directional day. And then I'm curious to see if Friday is Friday also going to be a directional day, or is today, we had a high low from yesterday. We're at the halfway point right now. The rest of the day is going to be really important to watch in the SPY, because if we reject that 560 level and we settle in near the lows of the week, okay, which is right around Monday and Thursday's low, if we settle in there, something tells me that next week, either taking out the high or the low, if we take out next week, okay, next week's trading, if we take out the low from this week, that brings in a big fat drop from, let's say, 554 lows to 542 lows. That's a big area for the bears to take over. All right. So my thoughts here, if we kind of hold this 560 level and finish near the lows of the week, this is how I'm approaching next week. Do we break the highs? Do we break the lows from this week's trading? Breaking the lows means way more bearishness for possibly another 10 to 15 points. We could see some decent cleansing on these markets after being up, 17%, 25%. It's not unrealistic to see a 3, 4, 5% correction, just like we had back in April, 6 to 8%. It's not unreasonable to think we could have a 7, 8, 10% correction if things get a little bit wonky. But that's where I'm at for the SPY today. Okay. If I go to the Qs, same type of thing, right? We had a huge sell-off yesterday, over 2% down from high to low. It read over 2% in the red, but it was like a 2.5% sell-off. That was a massive drop in the Qs yesterday. Highs around 504, lows around 491. So we had was that a double-digit day yesterday from top to bottom? I think it was. Yes, it was. Wow, that's crazy. That's a almost $13 move from high to low yesterday. Oof. If I had anybody trading some intraday or 0DT QQQ or intraday NQ MNQ, man, good opportunities there to be get some market love. So how about decision for now? Well, like I said, we have a high, we have a low. If this market from a high to low, because it did some technical damage on these recent pushes from Monday, Tuesday, and Wednesday, if this is doing some damage and this is just a pullback, next week is going to be important to watch. Does it take out the low, take out the high, right? Same type of idea. If we take out the low, I would say I want to be bearish on the NASDAQ. If we stall around here, we have no decision. I mean, I don't know what's going to happen next week, but I have a plan for if something's going to happen. We stay sideways, we probably stay sideways. We might not justify breaking higher highs yet. We break the lows, easily bearish on the NASDAQ, in my opinion. Okay. One other instrument I want to look at. It shows that it's still alive and well. It shows that the market actually cares, and it's the small caps. Okay, the Russell, big move to the upside. Look, I just showed you 2 giant red days on the SPY and the Qs, right? Look at the old Russell. Russell had one of the best days of the year. This thing has ripped from 203 to now 213. It's up $10. From a percentage standpoint, that is way more than the Qs, right? This thing is up 5%. Right, we had a 2% sell-off in the NASDAQ, and this thing's up 5% in the last 24 hours, essentially. Pretty crazy stuff. So I like the Russell And here is my plan of attack on the Russell. So we're up. I'm going to take a look and see how my Russell's doing right now. I might have some, man, this was not giving me problems yesterday. Let me see. So I don't know if this is just a bad sign on with Tasty, but let me log back out, log back into my Tasty platform. But directionally, I'm long in the Russell, and these trades are starting to rip really nicely. So let me get back into, maybe it's better if I log into them while I'm not running streaming services and having a bunch of applications running. Speaking of Tasty, if anybody's in the, I said this with my session this morning, if anybody's in the Chicago area, I'll be at a Tasty event this Saturday at Park West. So either one, sign up for the Tasty event and come join me, or two, if you're around the Chicago area, I'll meet up with you, grab a drink, grab a coffee, whatever. I got family in town that's coming to meet me Saturday as well. So anybody's in the Chicago area, let me know. Hit me up on my Discord, and we can arrange a little meetup. So just throwing it out there for anybody. All right, let me get into my platform here. Hopefully it doesn't give me a bunch of lag. All right. Okay. So logging in there, just want to get a read. I want to get a read on my P&L. So yesterday was a really good day P&L wise. I'm up to new highs on my portfolio. Today was up another $12,000, $13,000. Should be another high in my portfolio. Their oil's up, the small caps are up. Like there's a big. What I've been watching on the Russell is this. I said the same thing on the Dow. If the Russell can break this level, okay, to me this was a getting okay. I do not want to see the Russell come back and try to fill a gap. I don't, because that would be a rejection of this ascending wedge. This is symmetry all the way up here towards around 231. So I am long, and I have a position right now. Now I have a 185 long call by a 225 long call. So I'm going after $40 of credit. All right. And I mean, I paid for the trade, but I'm lowering the cost basis with some sells against this. But out to July, I mean, I've lowered the cost basis. I'm here, IWM. There we go. There we go. Looking a little bit cleaner now. On the day, not too shabby. And let's go here. IWM. This is just one account. I have a variety of trades here, but my 185 by the 225, I paid. So I know on that particular trade, the 185 by 225, that was a debit of 31.20. Okay, so I'm going after $40 of credit. And I think I lowered the cost basis again. So that was a 185 by 223. And then from May to July. Okay, so I'm doing the numbers here. So 31.20 was the debit spread. I'm giving myself $40 of upside, which means I've got $8.80 of profit potential. I then lowered the cost basis by another 86 cents. So my break even is 30.34 for a $40 max credit. This is a July 19th, so this is next Friday. I doubt we're getting to 225. Okay, I'm going to let this expire next Friday, and hopefully, I mean, if we get to 225, I'll make $40 and I'll make, you know, $9.60 a contract, which is fine. But what I'd like to see is if we are up, There's a couple ways I can trade the Russell. I can still add a 225. I'm measuring the move out to like 231. So I might look out another 30 to 45 days, sell against this, try to collect some decent credit. So let me see right now. Let's say next Friday, the IWM expires. By the way, who's here? I've got comment here. Good. Yes. Lee's the last comment that I saw. I just want to make sure. Do we have some traders out there looking for some, some gold, some silver, some dollar? Give me some comments in the chat. So I want to make sure that I'm not just talking to myself here. If I am, that's fine too. I do it for 5 hours a day anyway. All right. So if I go out, so next week will be a 7-day cycle. If I go out to August 16th or maybe the end of August into August 30th on the Russell, I could probably get a decent credit here. Decent amount, 225. If I keep the same strike price, I can lower that by another 250. I want to give myself more potential to the upside. I'm measuring symmetry out to 230. So I'll probably take like the 230 or 235, give myself another $5 or $10 of upside potential on that debit spread, while also lowering the cost basis by another, let's say anywhere between 90 cents and $2.50, give or take. All right. So I don't need to do anything right now, but I'm going to try to let the Russell rip. This is one of my kind of favorite instruments to trade for the moment, because this breakout is pretty key. And the nice thing about this is if I zoom out, and that is based on the Q4 rip from last year, and that is right here. So we have low to high, higher low to higher high. That's symmetry at 230. Okay. We have all-time highs just above the 240 handle. What I am looking for here is this the market's ability to catch up? Is the small cap going to rip in a big way and catch up and hit these highs? Look, the S&P and the NASDAQ might still reclaim those highs, or they might be completely sideways while the Russell is making up for lost time and lost ground, right? The Russell has been underperforming. It's up 1%, and all of a sudden it's up 6% for the year. It is quickly closing the gap between small cap, large cap. I think that's pretty exciting, because for a while, all we kept seeing was, you got to buy the Mag 7, you got to buy the Mag 7, got to buy the Mag 7. That's it. And so yesterday it finally switched things up. So I think that, that's a bit of a forced move to kind of jockey things around, maybe cause some inflows, some outflows. I mean, I don't know if this is all going to come into the broader market now, or if we're going to start to see more flows into bonds. Bonds would be more like risk off trading, so I don't necessarily see that. But flowing into small cap would be a little bit more exciting, because we're not measuring all-time highs. We're not like you're drifting into orbit, right? What you have here is a measured move to 231, an all-time high at 245. Okay. I like the idea that I could trade this thing for the next $20 to $30 of upside and use the futures market, use options, capitalize on leverage, generate some extra income, and get a good return on capital. Okay. So I like the Russell a lot, and I'm going to be paying close attention to that. Next week's trading, for example, on the Russell. Okay. Very different low to high, isn't it? If we break next week's high, I'm looking for higher highs. Easy way to trade that. If we're trading at 214, I will probably just do a debit spread where I go down about $4 or $5. I said this in my session earlier. If we're trading at 214, I'll probably look at buying the 209. Okay. And then go, so that'd be like down $5. I'm in the money on a call, and then I'll go up $5 and I'll sell the 219. So if I pay like, $4 to $5 for the spread, and I'm getting myself maybe another $4 to $5 of upside, that's essentially a 1-to-1. Right. But a higher probability with the market drifting higher. If I want to go out, I don't love that trade for just a week. I would probably go out 14 to 21 days, but give myself that credit and probably stagger a couple trades on top of that. So let me see what that price would cost me if I want to do that for, let me look here. So if I just did the trade now, 35 days out, 28 days out, let's go 35 days to the August monthly. So right now we're trading at 214. Let me see what type of intrinsic value I can get. So if I did, let's say a 209, we're trading at 214.50. I'll buy the 209 or the 210. If I buy the 210, it's a little bit cheaper. If I sell the 220, that's exactly what I'm talking about, right? So I can buy the 210, sell the 220. I give myself $5 of upside. Okay. I give myself $5 of upside. So if the Russell stays where it is for the next 30 days, stays exactly where it is, I still keep my $5. So there's very little risk on this if this price stays sideways. Okay, if it goes down a little bit, I'll be down a couple of bucks. But if we stay where we are and we rip higher, you know, we could get this called away at 220. We can risk $5, which is basically like, I think we're going to risk like a break even. It's probably not going to go too much lower. If we're truly going to see a move to symmetry and it's going to do this quickly, then I'm looking for the Russell to play catch up. So this isn't a bad trade to get in. It's going to cost $5. We have $5 of upside. If you want to go a little bit higher, okay, you can sell the 225. Now it costs you $6 to make $15. So you can see here, if you see my numbers, my risk is 642, but I'm still maintaining about $4.50 of intrinsic value built into this option trade, and then $8.59 would be my net profit. So I give myself a greater reward than risk, which isn't bad. And I give myself, 35 days. If this thing's going to rip, I want to try to give the bulls a chance to run. So the couple ways I can trade that going into next week. All right. So we'll talk that. Let's talk charts. I saw some requests coming in: dollar, yen, gold. Okay. Yeah, the currency strength. So I mean, the yen's crazy right now. So look, yen is friggin' nuts. Look at this thing. So we were up in the morning, down in the morning, up again. Good luck trying to catch every little swing on the yen. I'm telling you, keep the yen crosses simple. Okay. Go to your higher time frame. If you're, and I get it, like it's attractive. You're trying to scalp it. Just be careful, right? Trade it small. But I'm telling you, when this thing is giving us clear signs, okay, when it's giving us clear signs, that's the trade that I'm looking at. Okay, go 1 second here. I mean, I'm happy that we had a big sell-off day yesterday. I'm sure that anyone that's been in the yen, that's been hoping for yen strength, is way happier, but that's not me. I'm just waiting. If the yen is going to get stronger, to me, this is when it's easy to trade. Okay. Right now, as you're guessing at the top, you're getting some signs of confirmation. Okay. But is it breaking all these levels? I mean, remember, this has been in an uptrend. Okay. This blew off the top after intervention. There's no guarantee that this Japanese yen has to get stronger. Okay. So, and again, if you are looking to sell the Aussie yen or sell the dollar yen or sell anything with the yen, brokers are still going to charge you to sell it. So you better hope that you get this thing nailed for short-term opportunities, because if you're going to hold this thing indefinitely, and the yen's going to get stronger, I'm going to hold it, you're going to pay for it. Negative swap is a real turd right now. And I wouldn't want to be stuck holding the yen for months and months and months. It could be very costly. All right. So that being said, if we start to see this trade pan out to the downside, you are expecting higher volatility. That is the good thing. That's the trade-off. Rather than paying for negative swap, which you're going to have to if you're holding, at least the volatility should increase. Okay. Is the pound yen positively correlated to DXY? No. Pound yen is its own thing. Pound yen is more yen related. Look at the yen. Look at all the yen pairs. Pound yen is its own thing, just like the yen is. Dollar index is its own thing. I mean, every dollar pair is doing different stuff right now. We'll talk about that in just a second. But making sense? Whatever. Okay. So Aussie yen, do you see my chart? This is my question. Is there a reason to be crazy short on the Aussie yen right now? No. Because if we're going to get short, there should be plenty of opportunity here to go from, like, let's say 106 to 102, right? If we break this outer trend line, then we go from 106 to, who knows, maybe it takes out this low at 98, right? If we put in a big fat topping pattern like this, guess what? Easiest sell in the world. To see a top, confirm a top, trade a top. It all materializes into something we can trade. But right now we are wondering, is this the trade? And everyone's all excited that we're finally starting to see bearishness for the first time in weeks. But I'm telling you, I would not want to be holding this thing short. Okay. Not until there's confirmation. You get a bear flag in there, take a good trade, get your thing in profit, move your stop loss, and let it run. That's the best way to trade the yen pairs is get a trade in that you like, trade it small, define the risk, let the thing run when you're up 50 to 100 pips and see if it never comes back. Sometimes that's the easiest way to trade the yen. And it's not easy, okay? Go to your CAD yen. Okay? CAD yen, same thing. 2 big days of selling. Well, we had 3 big days of selling in April. Is this breaking any structure on the CAD yen? There's a low, there's a low, there's a low. If all this is 2 to 3 days of selling for the market to pick it right back up and make new highs, we can have this conversation in 1 or 2 weeks and it's like the yen's at all-time highs again, you know, or the yen's at highs again. Well, that stupid intervention was pointless. Exactly. So it's not quite confirmed that this thing is deleveraging, the carry trade is over and done with. Not yet. Okay, so watch the charts. Swiss yen was one of my favorite setups as far as the sell trade goes. We were watching the structure very closely this week in my flex trading room. We sold off. There's some follow through. This one to me looks pretty good for a postured bear flag. Okay, so we had a trade in. We have had a trade in here. I believe. Let me check if I'm still in the Swiss yen. I might have gotten stopped out of break even on that noise. Let me double check. All right, I'm going to check my broker platform here. I think I went to break even or better on it. Yep. So I got stopped out of break even. But this is one that I could justify a sell trade. Not right now. I'm not selling at the low. I mean, if this thing comes right back up and snaps, well, there's a couple ways to look at this trade. We have 2 days of selling. If we snap back here, I could put a stop sell right there and not even worry about it. If it gets filled, I'll look for that direction with a tight stop loss. Right? Not complicated. If we sell off here and we pull back, awesome. If we pull back to the top again, look for a rounded top, sell it nice and high, see if we get that trade to go sideways, right? It went sideways for a while, but there's lots of open space here. Inner to outer trend line, we can come all the way back down here to 170 or 168. That's 600 to 800 pips away. So I'm not trying to get super into and all in on like the Swiss right now. Swiss yen, it's a good looking setup, but do I get a pullback first? Do I get a sell that I want? Do I get a bear flag that I can sell? That's what I'll be watching. Euro yen. Okay. Euro yen, same thing. Still hasn't broken any trend line structure. So yes, it's exciting. Bears to take over. We really got to do something here, put in a topping pattern. I don't see it yet. Okay, pound yen. I see the request coming in. I see the NASDAQ. I see Nikkei. I'll take a look at those. Nikkei's down like 2.5% today. We poked some all-time highs this week. We gave some of it back. Another reason the yen's getting a little bit stronger. Nikkei is going to, and that's the correlation we typically see. If the Nikkei is down and down heavy, the Japanese yen typically gets stronger. So is it short term? I'm sure that in Japan, they'd love to see the Nikkei at all-time highs for the first time since 1984 or 1989. No, 1989. 34 years of drawdowns, and we finally made all-time highs. So I'm sure for the index, it'd be nice to see, all-time highs continue, which means the yen doesn't necessarily stick around with a bunch of strength. Okay, but there's some strong support. Look at previous highs. We'll talk about that in a moment. Pound yen, look at the trend line. It's right at it. Does it react here? Sure. Does it react there and go up? Maybe. Does it react here and drift sideways and break the trend line for a bear flag? Maybe. I don't know. I'm just watching price. Look, nobody can tell me the top is in. You all know that you can't call tops in these markets because you can be wrong many times. New Zealand yen? Sure. New Zealand is weak this week. The JPY has gotten stronger the last couple of days. Does this do any damage? A little bit. Doesn't mean anything, right? This could come right back to this previous high and then go back up to highs. Why? Positive carry, cash trade. Dollar yen, probably everybody's benchmark. It's kind of my barometer. Do I think 160 is this key level? I mean, it's interesting. We went from 160 to 162, and we also went from 150 to 152 back in 2022. We saw the yen have a big correction from the 150 intervention to the 152 intervention, and then we actually saw this go. But seasonally, this happened at the end of the year. Right now, this is July. I don't know if this dollar yen is going to gravitate towards this outer trend line, or if this is intervention, but we're talking about this again at 165, 170, 175 before there's a bigger unraveling. So would I be shocked to see the dollar yen sell off and then go right back up? Not really. Would you be surprised? How many of you out there be like, there's no way the Japanese yen is going to get strong or the Japanese yen is going to stay weak? I don't think anybody knows, right? Unless you are, in the know for everything that the BOJ does, you have no clue, right? So all you can do is watch price action, trade small, define your risk, and not make any stupid decisions. I think the yen has given us some good volatility. That's exciting, but there's no real clear trade, in my opinion, yet, as far as the bigger move. I like to trade open spaces in Forex, okay? For me to have one day, I'm not that excited about one day, okay? I'm looking to see, what can I get for the next week or two? What can I get for the next month or two? I want open spaces. That, to me, is the easier trade. All right. Other currencies, sure. Let me get to the earlier questions. Nikkei and Nasdaq. And so we go QQQ. Actually, Qs are pretty easy right here. I think this is a good way to look at the Qs for next week. So I want to say I talked about this early in the session, but maybe my request came in late. So we have a high for the week, we have a low for the week, and we're trading right here for today. To me, next week's trading is if we break the low next week, there is lots of potential downside on the NASDAQ. Okay, now I say if we break the low. I am not trying to call this as the top. Okay, what I'm looking for is we have high to low. This is pulling right back into a typical fib zone, 38250 pullback area, right? If we break the lows, you can see that the previous week is way down here. So is this market going to bearishly go after some previous levels, and will this take out some structure lows? I didn't draw that very well, but something like that. If this market breaks the lows and heads down, that's where we're starting to do some damage on this run, on this rally. Now that's if we break this week's low. Okay, this week's low is established by yesterday's low. If we hang out here going into Monday, we can go up and test the highs again, and we can ignore them. This never happened, right? The Jedi mind trick of the NASDAQ didn't sell off. It's right back to the highs again. Or we can do some damage to the lows, and I think there's going to be some follow through there. We've got to pay attention. Okay, I do think this is a critical stage to see if those bulls are just relentlessly bullish by having a 2+% sell-off day, and they're like, it's fine, we're going to buy the dip. That the evidence will be if we stabilize here and we go up to test the highs, bulls are still in full swing. Maybe the Russell outperforms. Maybe the Russell, if it gets back to highs, the Russell's already up to 216, 217, while the Qs are just retesting the highs again. Okay. SPY, same thing. Watching the highs and lows. Right now we're at 559. We're right around that 50% pullback zone. So here's the high, here's the low. We're right around that 50% pullback. If we hang out here for the rest of the day, next week, are we going to break all-time highs again, or are we coming back down to test the lows? I don't know. This is what I'm watching. We break the lows. Okay, if we break the lows, guess what? There's the floor. If we break the lows, bears could be doing some damage coming into some type of trend line break like so. I had said that the floor is all the way down here at 542.50. Right now, this is past resistance, right? So could this market use, this area as a bit of a top, a bit of a stall, and the market maybe pulls back into this zone, finds support, and then we have all-time highs again? Maybe. Are the bears going to try to do more damage? I don't know. We'll find out. Okay, so watching closely. All right, Nikkei, sure, let's talk Nikkei. So the Nikkei 225, A lot of action here for the week. This is pretty wild. So we were up. This is 40,800, all the way up to some fresh highs. It was up about 4% for the week and has given most of that back. Okay, again, Nikkei, and here's another thing to correlate with the yens. If the Nikkei takes out this week's low, and again, like Asia session is essentially done. You're looking to see what happens coming into next week's trading. If it takes out the low, I would expect JPY to get stronger, right? So if the Nikkei takes out the lows, I would look for the JPY to get stronger and have this sell-off continue. If the Nikkei comes back and just retests support, this was yesterday or the last week's high. We test this level here, we stabilize, and we start to rip higher, Japanese yen gets weaker. That's a pretty good correlation you can expect to see. The Nikkei goes up, Japanese yen goes down. Nikkei goes down, Japanese yen goes up. Not that difficult. Just check on a couple of instruments. All righty. All right, gold and silver. Sure, let me get back to the SPY here for some intraday price. And then I'll use this other workspace here for gold and silver. All right, gold and silver. And I've got my workspace and tabs right here. Gold, I still like gold to the upside. I am still bullish. Is this the beginning of the end of the dollar rally? We'll find out. Dollar index to me has to break below 103.90. I'll share that in just a moment. Gold to me is still potentially sideways. The one thing that's going to be interesting on gold is if we start to see central banks starting to cut again. Okay, now it's pretty official that the market's anticipating a high probability rate cut. We go to the Fed Watch tool, which is right here. Okay, it was up to 80+% yesterday as of the CPI data. Right now, going into September's rate decision, it is sitting at, survey says, oh my Lanta, 89.8%. Look, it wasn't that long ago. This was sitting at 45%. This market is now like basically priced in, baked in a rate cut. Okay, the problem with that is if this is buy the rumor, sell the news, that's not a good thing for the bulls, right? Now you'd think a rate cut would be good. You'd think a rate cut would allow this catch-up trade like we're seeing in the small caps right now, this rotation out of the highly concentrated, market cap, Mag 7 into other stuff. But I also wonder if there's a lot of potential movement in the small caps and catch up and rebalancing. And then as we go into the September effect, Jackson Hole, is the Fed actually going to make this decision coming into September? And then you've got Q4 up for grabs. Q4 is what? Earnings season plus a U.S. election. I mean, is the election drama going to cause a lot of turmoil and chaos in the markets? Maybe. Maybe up, maybe down. I don't know. Right? If we're up, 17% for the year, I do think it's possible that the destination this year for the S&P is going to be 20+%. I don't think it's unreasonable to think that 20+% can be hit. Okay? But I wonder, do we go from 17% down to, let's say, back to 10%? And then from there, rip up and find 20% destination for the year. So do we have to have a pullback first before we can hit all-time highs with the Q4 rally? Or is this melt up, find that 20% level, and then all of a sudden the market is dumping and tanking at the end of the year as we go into maybe a tougher 2025? It's hard for me. It's like at this rate and at this pace, it is hard for me to be super, super bullish going into 2025. That's just me. Okay. All right. So this has jumped up from about 45% probability over the last month or so now to 90%. The market expects a Fed rate cut. I know that Powell had a 2-day testimony this week. The market doesn't care. They are pricing in, have been pricing in, are moving ahead with Fed's going to cut rates. They're justifying it with inflation data is trending lower. Job numbers are softer. We're on that brink of inflation. Rates are coming down a little bit. Yields are coming down a little bit. Bond prices have been up. So yeah, market's like making a move. Now I just wonder, look at this. Look at this recovery, right? 556 lows. We're already up to 560 today. Coming in next week's trading, there's the high, there's the low. This is all I'm going to watch, So, pretty wild week, to be honest. Wednesday direction, Thursday direction, Friday direction. There's some pretty good short-term trading there if you're a, options trader. Let me see if this filled up on my. So, my gamma level is still pretty light. If we came back up to 563 again, that'd be pretty darn impressive. That would get right back up to the friggin' highs from the week. I mean, anything is possible, but man, this thing is wanting to go. If it's not going to reject here, maybe this market's interested in 562, 563. Okay. And all it was a one day pinch. The market got slapped for a day, and then it's right back up to where we started. So let's take a look at the let's see what the heat map's doing right now. Right now, heat map is, other than Meta, which gapped lower, Amazon's down slightly, but you have Apple up, Nvidia up. JP Morgan had earnings this morning. Wells Fargo had earnings this morning. Citi had earnings this morning. Those are all red. So to kick off the earnings season with investment banks, that's probably not a good sign. Next week we'll have more earnings, and I'm going to be looking to hopefully play some trades, but keep my cost basis really, really low. I'm not looking to spend a bunch of money on a bunch of earnings when we might have lackluster moves. You never know. Okay. So, all right, let's go to the advanced decline and let's take a look at a couple other things. Advancing, we have 76.4% of stocks advancing. That's pretty good versus 16.6. That feels a little bit more like a healthy. Okay, new highs, 94% versus 5.6. Above the 50 moving average is now 70% versus 29% below. Above the 200 moving average, almost 70% versus 30. Okay, I'll throw this out there. S&P 500 finally looks like an S&P 500. This is a good sign. Okay, now does that translate elsewhere? Let's find out. If we go into the, let's go home and see if I can translate this into other instruments. So not just the S&P 500, but can we go NASDAQ? So let me go. It's supposed to be over here. Get this stupid ad out of the way. I was looking to see like what's the 1 day performance, what's the 1 week performance on the Qs. But anyway, I would say at a glance, this looks a lot healthier for a bullish market. So we're looking at Dow's back up a little bit, NASDAQ's coming back in a big way, fighting back hard. S&P's fighting, Russell's up. I mean, Russell's clearing almost 2% again today. Freaking awesome. Okay. So lots to watch, lots of activity. You good on the NASDAQ there? Okay. Any other charts, any other questions? Here's my kind of poll report dashboard, SPX, Qs, NDX, DIA. So your diamonds, your small cap Russell. Let's have a look here. I want to share this for a moment. I talked about this morning in my session. I might take a trade on copper right now. Maybe this is the wrong chart. Let me go back to the SPY here. Let me take a look at copper. I might have a peek at copper. 4.58 on copper futures. Let me see if I can do something out here and get this trade financed. So I'm going to go /HG. The heck? Where's my copper at? Heating oil, lean hogs. There it is. Yeah, that's what I typed in. All right, HG. So if I went out 75 days to September, interesting. Let me see. This is, it's a fairly mechanical trade. Let me see what 46 days looks like first. Could I build in? Let's see here. Let me look at my deltas. If I build in like a 10 delta right there, okay, I can get paid $387 of profit for $104,000 of risk. Probably not a good trade. I'm going to reduce the buying power a little bit here and probably put a spread on this. Let me check on a couple of things. So let's look at these numbers. So 4.19 is way down here. Okay. I could probably set this a little bit up towards 4.20, get a little bit more credit out of that. 420, let's go 420 to 415. What does that spread look like? So that's not terrible. It's not great though. $125 of income. So that it's a return of about 12% return on buying power, return on capital. 420 to 415, not bad. This might be cleaner than what I was going to do. If I looked at if I did like a crash here below 4.4, so 4.4, if I buy a put, and then against that, I'll go about 50 points wide. So let's go to 4.35. So this is a little bit better. Now I have the potential to get paid. And I'll probably have to spread this out too. So I can get paid here. I can get paid here about, you know, it's about 5 points. That would be a max profit of around probably maybe $1,200. And then the naked put around $300. So let me spread this from 4.2 to 4.15. Okay, this is way better. So if I don't take this trade here, so I'm going to go 4.4 and 4.35, delete. So my safe play would be I put on a spread. I'm looking at $137 of income. But to generate a little bit more profit potential, I'm going to do this trade. So I'm essentially doing this as this is called a put condor, where what I'm doing is I'm doing a bear put spread right here in case there's any downside on copper, but I'm doing a bull put spread down here in case there's an upside and a floor on copper. So if we stay above this level, I get paid. If we stay above this level, I'm going to lose on this trade, but I still keep my credit overall. If we go down into this window in between, there's my max profit of $1,000. The nice thing about this trade is with spreads, I'm only putting up about $337 of capital. So not too bad. Over 46 days, this doesn't get me into September. I'm thinking we have a pretty solid runway through hopefully August. So I'm not looking for a huge move. Those deltas on that spread, this is an 11 delta, an 8 delta. All right. I think I'm going to take this trade. So hopefully I can get filled here at 0.0095. Not tying up a bunch of capital. If I wanted more profit potential, now I can get up to $2,000 in profit for a $725 risk. I mean, that's 300% return on capital, which is not a bad trade, obviously. We have to see if price goes up. If copper stays where it is, I get paid about $250. If price goes up, I keep that $250. If price goes down a little bit, I might increase this to upwards of $2,000. And where's my floor? 4.20. So if copper is going to have some type of, dead cat bounce or maybe even a retest of these highs, I'm going to look to stay in it. So I like the trade enough so that it's not tying up a bunch of capital. There's risk on the trade. I get it. My max loss is $500. All right, I'm going to take the trade. So let me see if I can get these all filled. There we go. 0.0090. Let's try that right there. Let me see if I can get 9.5. Pending. Okay, so not filling there. 9.0. Not filling there. 8.5. That's right below the mid price. Come on, man. Don't rip me off your futures market. 8.5 is not filling. So I'm below the mid right now. All right. This is, if I don't get filled on this when I'm, 10 points off the mid price, I'm just going to not take the trade. So this will be my final offer. It's not filling. Shoot. I mean, now the mids, hang on. I'm going to leave this pending at 0.90. I'm going to leave it pending at 0.90. If that gets filled, then I'll go ahead and fill everyone else's account as well. So, never mind. I'm canceling that. I don't want to take it as a debit. I don't want to do a debit. I want to take it as a credit. So never mind. I'm out of that copper trade. I guess I can just do a credit spread, but that ties up a lot more buying power. So if I did the 420, and I'll move off copper here in a moment, but 420 to 415, $520 of buying power, generate about 20 to 25% return on that. Probability of profit's pretty high, probably an 85 to 89% probability of profit. The trade's out 46 days. anything I can do with it? I mean, I could potentially roll this one. It'd be nice to do something like this. But now I'm going to pay for that trade. So I went from a credit to a debit. That's kind of like, how do I not turn this into, oh, I got to turn this into 2. Let me see something here. If I did this as a butterfly, let me see if I can turn this 4.20 into 2 contracts. Interesting. That's a little tighter. I don't love it. All right. I keep going back and forth. I do like this trade. So if I did a sell put there, and then let me see if I did contracts to make this over $100. I don't love that. $420 to $415. All right, never mind. I'll come back to this. I don't need to bore you with my mechanics. D says, hey, man, I don't know anything about trading, but I will learn by watching this live. Well, if you have some questions, I'm happy to teach. So what do you want? I mean, there's tons of information you can take away from these live sessions. I do a lot of live trading in these sessions. I do a lot of live trading in my trading rooms. This is why I'm live for 4 or 5 hours a day. If you don't know anything, best place to start, come to these live sessions, absorb this information. My YouTube channel, I've got a ton of education on my YouTube channel. It is youtube.com/Chris Pulver. And you can, a good place to get started. I'm not sure what your asset class is. You want to trade stocks, options, you want to trade futures, crypto, you want to trade Forex. If you come into my YouTube channel here, go into your video section. Okay. I've got lots of videos here. So 506 videos. If you search in my section here, you can search for any of these. A lot of these are live sessions with Nick and the team, my Pulver report that I go live Mondays and Fridays. But if you want to search for something, search for 101. Because now you got a bunch of these videos. Okay. Swing trading, educational videos. There's a bunch of those in the playlist. There's probably 60, 70, 80 videos. Not to overwhelm anybody, just to say like there's information out there. Okay. So, and also if you watch my videos, leave me a comment, ask me questions, join my Discord. Why? Because all I'm trying to do is help traders out there. If you want to trade stocks, I trade stocks. You want to trade ETFs, I trade ETFs. You want to trade futures and options, I trade those. So a good place to start if that helps. Okay, cool. All right, sounds good. Good question. Thanks for being here. All right. I don't know why. Maybe it's because Frank's not on with me. It just seems like this session, maybe I've just talked 100 miles an hour, but we talked SPY, we talked NASDAQ, we talked Russell. I like the trades a lot. The market's clearly trying to fight back a little bit today. Look at our sell-off from yesterday when everything is all bizarro. The market's actually up, right? I'm sitting here with a fresh watermark high. That's good. Not going to complain about that. I'd like to put a trade on in copper if I can find the right price structure in my mechanics. But the SPY from, it was up all week with these steady little runs, and then one sell-off day, market's just not having it. So currency strength today, the Japanese yen has been all over the place. The SPY is trying to fight back. The NASDAQ is trying to fight back. NASDAQ is a little bit more of an uphill battle because of the severity of that sell-off yesterday. But it did feel like this kind of broader market. Look, you've got 70% of stocks advancing, 30% of stocks declining. Most stocks at highs, most stocks right now above their 50-day moving average and above their 200 moving average. That is the resumption of a buy zone. As a broad market goes, that's a pretty good sign with the advanced decline line up. Okay, so not too bad. But does it mean that we're going to break all-time highs again? Maybe. Maybe that's all the market needed. Okay, is it too late to invest in the AI bull market? No, because look, investing is never about, is it too late? If you believe in something and it's longer term, if you think AI is going to change the world, AI is a long-term play. Okay. There are probably certain stocks that I would take over others. Look, I think NVIDIA, it is now outperforming Bitcoin as, the greatest asset of all time. Look, for the last 20 years, NVIDIA has been a freaking ridiculous asset. It has come from essentially tiny little stock to now our gargantuan, like, I mean, I don't know what it is right now, top, well, we know the top three. So Microsoft, let's check the market cap. Market cap of Microsoft is $3.38 trillion. Apple, I believe, was higher than that. Apple is 3.55. Good Lord. So Apple is number one right now. NVIDIA, even after a 10-for-1 split, doesn't change anything. We're at 3.22. Billions of dollars in market cap to $3.22 trillion in market cap. Look, NVIDIA has a great head start. The profit margins, the revenues, they're great. Earnings, we're going to find out what NVIDIA is made of, because this thing has not missed earnings in a long time, and the market just loves it. But if we come into August and NVIDIA misses on earnings, maybe it all changes. Why? Because now it's going to have some competition. You know? So, look, I think the AI trade is here, but, you know, what's the way to trade it? Right now, AI is in a lot of places, but your semiconductors have probably been the easiest trade. Do I love this trade right now? Not really. You know, you're talking about a move from 199, you know, it's up 42%. Now, I don't like to buy things at highs necessarily, but who am I to say that SMH can't go up any higher, right? SMH might be going to freaking 300, right? SMH might be going to freaking 500. I don't know. But that's the way to get some exposure, or individual stocks on good levels, good fundamentals, good earnings. One thing you have to remember on the stock market as an investor, it wants to go up, okay? The very true saying in the market is time in the market is better than timing the market. So for you to ask me, is it too late? Look, time in the market is all you need. If you've got a 10-year horizon, probability of making profits very high. If you have a 20-year horizon, there is no period over the last 100 plus years, okay? There's no period that if you've held stocks over a 20-year period that you have not made money. Even if you bought stocks in 1929, if you bought stocks in 1987, bought stocks in 2000, 2008, there's not a period, I guess 2008 to now is not 20 years, but my point is the market's designed in you know, again, this is a kind of incredible fashion, but the market's designed to try that positive drift and go higher. The tricky thing is if you get in now and somehow we're at a top and the market's going to go sideways or down, you feel like, oh my gosh, what am I going to do? This is why you got to learn how to protect your portfolio. I could buy SMH right now and do this. I could buy SMH right now at $277. And what would I do to protect myself? Well, I could buy it right now. I could go to a 270 and I could buy a put to be protected. And I can go up here out further to probably, let's say I did a 270 put for $7 the downside, and then I go up to 300 for a call. If I can get my call to pay for that put, I'm essentially hedged for free. So if this goes down, I can ride that lower. If this goes up, I get it called away for profit. I could do that over and over and over again and have every trade that I'm in with protection. Make sense? So it's never too late. What is important is though, you have a plan. If I just buy this and it goes down 20% and I don't have any protection, I'm pissed about that decision. But if I buy it knowing that I can protect the downside and get an asymmetrical upside, if I can make 10% here for a protected move to the downside just in case it goes lower, well, I lower my cost basis, right? And I own it cheaper, and then I redeploy another put, another call, give myself some upside potential, fade, you know, or favor the upside. Do it over and over again. It's called collaring. That's a fancy way to trade with options. So you can do that on SMH. You can do that on most stocks. Any stocks that's optionable, any index, you can do the same thing. Okay. Now, I say that if you're going to trade options, you're controlling 100 shares. So if you just bought this and you're like, well, I've got $1,000, what do I do? Well, you trade one share of this, right? Or 4 shares of this and you're all in an SMH for that $1,000 investment. You can't trade options around that. Or if you do, you're using a little bit more leverage and you got to make sure those options stay out of the way. But you can finance this stuff. That is kind of the nice thing is like, you're going to take some buying power, but let me just show you, all right? Let's say like right now on SMH, okay? And actually, you know what? SMH is one, but also there's an ETF called BOTS. This is literally Global Robotics and Artificial Intelligence ETF. Where's this one at? Well, we had a peak here in March, And surprisingly, bots and artificial intelligence ETF hasn't made higher highs. So SMH, the semiconductor play, has made higher highs versus this. This is supposed to be the AI ETF. Okay. Can you post a link on the basic knowledge for catch up on your live stream? So if you're on the live stream, just watch the recording afterwards, I guess, if you missed the first segments this morning. I mentioned earlier, if you want to come to my YouTube channel, you can find out not just, live stream stuff, but also all my education that's like very concentrated into a subject. So when I talk about options, I have, videos called Options 101, Trading 101, Keep It Seriously Simple, stuff like that. I've got a ton of videos on that. So if I put money in and it drops, I can still go out with all of the input. That would make it zero. Well, it's not zero risk, but you're basically going to be able to move with price. So let's just use SMH as an example. Okay. Let's have a little teaching moment right now. And I'll show you exactly what this trade does. Okay. So if I buy SMH right now at 277.50, I will construct this trade for you right now. So if I buy SMH, I'm going to go into my Tasty platform here. This is my broker. If I go long the stock, am I missing something? Hello. I feel like I'm missing. Weird. All right. Maybe this is why. Futures. I feel like I'm missing something. I admit this might be on my computer. Anyway, let me go SMH. That's probably why. There it is. Long the stock. Okay. So let's say that I buy SMH. Now, if I want to control, and there's two ways we're going to approach this. One is I have enough buying power to control 100 shares of options. And so if I cover this, I'm protected up and down. Okay. But let's say that I don't have enough money to buy. I mean, how many of you out there, I don't care if you have a margin account or portfolio margin. I have both. I have IRA accounts, which are strictly cash accounts, so I can't over leverage those. I have margin accounts, which are roughly 2 to 1. And I have portfolio margin accounts, which are roughly 3 to 1, give or take. Okay. So if I buy, let's say 100 shares at 277.25, if I have a cash account or an IRA account, it is going to cost me $27,000, almost $28,000 to take this trade, right? If we don't have that type of capital to allocate to SMH, then I'm not taking that trade and controlling 100 shares. All right. Now, here's what's kind of nice about this. If I can do this trade, let's position this like I can take the buying power. I've got $434,000 worth of buying power for my options. I have $668,000 worth of buying power for my stock. I could buy this ETF. I could buy this stock. I could buy a lot of things with almost 700 grand. Okay. So is that a big allocation? No. If I took that, let's take 27K, almost 28,000 divided by my total buying power. That would be a 4% allocation to my portfolio. Is it good? Maybe. The growth maybe outweighs the risk, but here's what I would do. I wouldn't just buy it with unlimited downside, right? I wouldn't buy it with the blindness of like, it's just got to go up. It's AI. Here's what I would be doing. If I did the 277, okay, I would go out probably 50 days here to the end of August, or honestly, I'd probably go out 70 days to get through what I think timing wise, we typically have a slow August. We have a lot of volatility around Jackson Hole. And then coming into September, we have the September effect, which is usually tax loss harvesting and seasonality. It's one of the most bearish months in the market. Now, is September always bearish? No. Is September always the worst? Not really. But it's known for having some spouts out of the summer, and it tends to be a sell-off month. So if I bought the shares of SMH for 277.28, what I would be doing is looking to protect myself. Now, if I want to go very tight, right here, okay, so pay attention to this. If I pay 277 and I buy a put for $13, you notice that my debit just went up to 290. So this is going to cost me money, okay? If I want to add protection, it's going to cost me money. So I'll type this out in yellow so you can see it. So 277 is the stock itself, is the ETF itself, okay? If I want to add protection, $13 to add protection. Okay, so this is going to be my insurance. Everybody follow me? So this would be the ETF. Type in a wire yes if this is clear. So if I buy the ETF, it's $277 per share. So I buy 100 shares, it's $27,000 and change, right? If I spend $13, $13 as an option contract is representing 100 shares of stock. So this actually cost me $1,300, which is going to put my total cost up to around $290. Right now, watch this. I need to cover for $13. I need to cover this and make it so it's essentially a risk-free collar, which means I'm looking at something to give me credit on the upside and let the ETF get called away, but I'm also financing my protection. All right. So I can go out. So if I buy the 275, and this is 275, so I'm protected within about $2 of price right now. Okay. So in the event that it goes down, I'm only sacrificing about $2 of movement. So if this stock dropped, and let's just put some crazy example out there. If this stock drops from 277 down to $200, okay? If we go from 277 down to $200, my put is actually worth, let's say we drop to $200, okay? The ETF that I buy is at 277, so it's down $77, but my put is worth $75. Everybody follow me? So this $13 that I'm paying for protection is actually going to be worth at least $75 of actual value. And so I can ride this thing all the way down to $200, and I'm going to be about $2 off of current price. So conceivably, I could be owning SMH at 202 with a break even if I ride with my put all the way down to that 200 price point. So I'm not getting, it's not risk-free. I'm still down a couple of dollars, but imagine being at 277, watching it drop to $200 and thinking, oh my gosh, I'm down 30%, 40%. Now what do I do? You know, most traders or investors look at that and they're like, I got to buy more. I got a dollar cost average out of it. You're just wasting capital, and you're throwing capital at something that sucks and it's down and it's turning negative. So this is why protection is important, you know, because if I can protect it on the way down, I can ride it lower. And when I'm ready to get out or you know, close out my put, I roughly know my break even. So I can take most of that run, not all of it, but I can take most of that run and do a pretty good job protecting. And if I did take the put off, what would I do? I would just do it again. And I'd still want to have protection to the downside in case the bear market continues, or still cover to the upside. Now, not done yet, because this is just talking about protection. Now to the upside, watch this. So if I went out to September to the 275 put, I'm going to go out a little bit further on a covered call. So I'm going to go out to November, give myself another, that's another 50 days, because we're skipping October for some reason. I'm going another 50. This will be easy. I'm going on another 50 days. 50 days of time, okay? And I'm going to pair this with, if I buy the ETF at 277, what do I need to do to cover my $13 insurance, right? I need to cover $13 of financing. Look at these covered calls. I could do a 290, I could do a 295, I could do a 300, okay? So this is what I could do for essentially free, okay? The ETF costs 277. I can sell a $300 call, which gives me what? Okay, this gives me $23 of upside. Okay, and I'm only giving myself $2 of gapping for the downside. Does this make sense? So I'm giving myself an upside that is way more favorable, and in the event that the market's going to sell off, I'm protected to the downside. Okay. But if SMH goes up, I'm going to lose the money on my debit for the insurance. So I'm going to lose the put side, but I'm letting this price run up to potentially 300 or higher. And I can say, look, I bought it at 277. Right now I can buy the whole thing for 276.55. It's essentially a free hedge. Okay. Now, what is my upside? Well, if this ETF goes to $300, I'm going to make $23.35 per share. All right, I'm scribbling there, but everybody follow me? Type in a wire, yes, this makes sense. Okay. So I'll make $23.35 as opposed to I'm giving the put side about $2. Okay. This is an easy way to protect yourself. Now, this is really mathematically simple. It's just addition to subtraction. But if you have the ability to trade 100 shares of something, you can use options because they represent those 100 shares. One contract and option represents 100 shares. All right. By the way, A1 Trading, Chandler, James, you guys are watching this. Like, feel free to splice this up. I feel like this is a really good education moment for a lot of people. I'm having some fun walking through this. So if this helps, I'd love to have like some shorts and like this thing spliced up just for my own reference, or I'll have to recreate the video. But anyway, this is what's fun about doing these things. So I'm protected the downside, and that way, if SMH goes to hell in a handbasket, I'm protected within about a $2 buffer. So I know it's not all of it. I know it's not fully protected, but man, I'm only giving myself about a $2 buffer, and I'm protected for up to $23 of profit. So I'm protected to the downside, giving the market about a $2 head start, or I'm getting profit to the upside to $23. So you can see that I can program this in such a way that I get a favorable reward to a much needed and much more like peace of mind, right? Would be, I want protection. So that way, if it goes down, I'm okay. If it goes up, that's what we expect it to do anyway. And I give myself some upside where I can make more money. And so every position I'm taking, I do this. Now, I'll take this for, let's talk about this for like another 5 minutes. Okay. If I could not control 100 shares, meaning I don't have the money to put $28,000 into SMH and I can't trade 100 shares and I'll show you this too. Okay. Now you can't really read my beautiful mind scribbles here anyway, but I think we're good on the example. Now let's say that I can't take the 100 shares, but I can buy one share and I want to have some exposure on SMH, but I want to also lower my cost basis, protect my downside. If I own the share and it goes down, do I want to buy another? Like, let's say I have $1,000 account, which is tiny, but if all I want to do is, buy this hype of AI and buy semiconductors, I'll put 25% of my portfolio by buying SMH. I will show you how to use the same strategy, but let's check the buying power. That's what's going to be important, because essentially you're going to put on, well, it's a collar, but let me see what this is going to cost us to trade. It shouldn't cost us anything. That's the point. Okay. But it will tie up some buying power because we don't have enough to basically wash it. If I have 100 shares and I sell a call against that sell call represents those 100 shares. If I have one share, I'm only covering one share. So if I sell a call, that means that's 99 shares that I'm not actually owning. Does this make sense? So there's a lot more risk if I don't have the ability to have the shares outright. I'll show you. Okay, watch. Doesn't mean it's impossible. You just have to be a little bit more nimble on how you're going to craft this trade. Okay, so watch. I don't have the shares right now. I'm going to clear this whole position. Right now it's trading for 277. If I buy the stock and I go down to one share, okay, that one share is going to cost me $277. Okay, one share cost me $277. Now, if I do the same mechanics where I protect this below 275, okay, and then well, let me delete this one and go back to that September hedge. If I did the hedge here to September at 275, there's my $13 debit. If I wanted to protect this, so I can go at the money like $2 off, and I can go, okay, I mean, this is a fair way to do it. I could sell a call against it. No, that's dumb. I'm not going to do that. Okay, let me go out like I did before. Let's go to November. Let's finance that $13 position and give ourselves some upside. Okay, so right now, if I buy one share, it's $277. The debit on my September put is $13.05. Okay, so I need to finance this by $13.05 to make this basically a risk-free trade. So right now, I buy the 275. I go to November and I sell the 300. Okay, so I just went from I was supposed to spend $277 Now it's only going to cost me about $235. The problem is with this trade, if you don't have the buying power to take 100 shares, which would cost you $20,000, I'm still putting on trades with options that represent those 100 shares. Does this make sense? So this $300 call represents selling 300 shares of SMH. This August 30th, the September 20th hedge represents shorting $275 or 275 strike, the put. It represents buying that put. So this is me saying I'm directionally bearish at $275 on SMH. And at the same time, on the November, I'm hedging that position to say I want it to go up. But the issue with this trade is I don't actually own the 100 shares. So this is simply just a synthetic option trade that I can't have the stock get called away. Example, if SMH goes up above my $300 strike, you know what this broker is going to do? I own one share, and this represents 100 shares. If price goes up above $300, this broker is going to assign me negative 99 shares. I guess, actually, they'll assign me 99, but they're going to assign me at a sell position at $300. Okay. Do I want to short this stock or this ETF? No, I don't want to short it. So what we'd have to do with this type of situation is we'd have to be moving these, right? I want the protection to the downside, but if this is going to be threatened to the upside, I have to move this out, move this out, move this out. I never want this instrument called away. So if price is going up, you can move this put up closer to price, okay? And keep it collared, and then you move this up out of the way and try to keep it out of the way where it doesn't get called away. You don't want to get assigned short, okay? Because again, if in the situation, you don't have the buying power to do it, okay? All right. Trading for a Living says, what ways do you suggest I could get that kind of capital? Keep trading, you know? My biggest run in trading for me that helped me get to my, my point of preservation of capital was, I had a very lightning in a bottle type year in a Forex market where I had about 20K. It took me about 12 to 16 months, 20K to 150K in a Forex account. Once I did that, I kept 50 grand in a Forex account, diversified into the other 100 grand in stocks and options. I've been trading that for the last, 10, 12 years. So, and I compound it and I grow it. And there's, I pay myself on some accounts. I grow them and compound them forever in others. So trading is what gets you there. And I'll leave you with this today. I've been going for a while, and I guess I'm the last guest. What nobody got. Nick didn't come on and kick me off like he did yesterday. Process equals profits. So how do you get there? You keep trading. You figure out what works. You do what works, and you stop doing what doesn't. If you're frustrated out there with trading and you're struggling and you're making bad decisions, stop doing it. Trading, it's interesting. Like if you're just starting or you've been doing this for a while, it's like trading, you have to learn about yourself as a trader. You might think you know yourself as a person, but knowing yourself as a trader is very different. You take real money, real emotions. There's some raw stuff in there that you can't fabricate anywhere else. So it does help to, if you're trading real money, see what your emotions do. This is why I don't day trade. This is why I'm very particular on how I trade. I trade so my level of, day to day is very calm. I don't have a lot of ups and downs. I don't, my day-to-day life is usually pretty calm. I don't get stressed and frazzled about a bunch of stuff. I don't want my trading to do that for me. Why would I be like really calm and collected day in, day out, and then trading makes me like super volatile and emotional? I don't want to be that person, right? So you get to know yourself a lot as a trader. It will test you in ways you didn't think were possible. I've had countless sleepless nights, and I slept by my computer. I'm waiting for chart alarms, my phone, and setting, alerts on the hour. I've done all that stuff. So what do? Figure out the way that I can trade size-wise, trade risk-wise, where I sleep. It's a job, right? I love this. I can talk about this all the time, but I just focus on what I need to do to make money. Process equals profits. Okay. There's no home run trade. Somebody asked me a good question yesterday. I don't know if it's in this session, but somebody asked me like, why don't I make more money? You're talking about $300. I'm like, yeah, because I'll take 1,000 of those trades instead of one trade that's, I either, make 10 grand or I lose 10 grand. I'd rather, lose $100, make $100 and do thousands and thousands and thousands of trades, because that way one good day, one bad day doesn't define me, right? One good month, one bad month doesn't define me. I'm still here to trade. So process equals profits. And yes, you will learn things about yourself you didn't know as a trader. Not saying it's a bad thing, but again, tap into that and be self-aware. That makes a big difference. All right. Cool. All right, everybody. I think I'm going to wrap it up here for today. Good little lesson. Great question. Great commentary. Thanks for joining in. And, Nick, team at A1 Trading, thanks a lot. It was a great week. Let's finish the week out strong. We'll be back next week for more. And I know they're running a special on Edgefinder. Jump in and grab it. You have any questions? Talk to a person, right? 55% off is ridiculous. They're fortunate. They give me a promo code if you want to get. I've got it on my Discord, but get it through Edgefinder. Talk to the staff. I've got a promo code as well. Promo code's Pulver. So anyway, have fun. Have a great weekend. Happy Friday. All right. See you soon. Thanks. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.